Bankruptcy.
A stunning fall.
Major restructuring. Debt is piling up.
I see people talking about this Ryan Matta video. By the way, I want to be clear on this. We're sending him a cease and desist, and we will also probably be suing him because we never got paid a dime for talking about Costa. Just so everybody's clear on that. We never were paid a dime talking about Costa. I know Carl very well, and I like him, and I think it's eventually going to be successful. So you can't make up lies about people and get away with it. And there's people finding out that right now. Can't make up lies about this channel. I will not stand for it, just so people understand it. And so really, what happens is you have these people, they're wolves in sheep's clothing. And that's exactly what that guy is. He's making up accusations for clicks. He's the worst kind of person, the lowest common denominator. So if he can provide proof, then that would be great. But he can't because it doesn't exist. So just so you guys know, I'm coming after that guy.
Real quick, last question. I think it might have came up. You were Hillary Clinton's CFO in the campaign, right?
It's part of my history.
Were you? Yes or no?
In 2016.
Did you facilitate the payment for the Steele dossier since you were CFO of the Hillary Clinton campaign?
Sir.
Sure. Yes or no?
Sir.
Yes or no?
That was not.
You're under oath, Chairman Gensler. Yes or no?
I know.
The collapse of the cryptocurrency exchange FTX is, even if you're not interested in cryptocurrency, a history-changing event. It may turn out to be the biggest single-day loss of assets in the history of money.
First, you were Clinton's finance director in 2016, Hillary Clinton's finance director. Second, you hired anti-Trump enforcement director Grewal in July of 2021. Third, you brought in Ms. Barbero, who was the litigator on 2 House impeachment trials against Donald Trump. You have another enforcement counsel who is married to Peter Strzok. In November of 2021, Senator Warren urged you to investigate the SPAC merger involving Donald Trump's Truth Social company. And in December of 2021, just a few weeks later, you guys launched an investigation using a novel legal theory against the former president's social media company. That is some coincidence, isn't it, Mr. Gensler?
Senator, it is good to meet you in person.
Senator, it is good to meet you in person.
But I think you're not correct.
What was I not correct about there?
Billions of dollars evaporated in just moments, and it's still not clear what happened to a lot of that money. It just disappeared. And as it did, it sparked a growing financial crisis across entire sectors of the economy, a disaster that quite possibly could get worse very soon. But the story of the FTX implosion is bigger even than the global recession it may cause. It is the story of the complete and utter corruption of the people who run our country. The very people who should have been covering and regulating and reining in FTX and its 30-year-old founder, Sam Bankman-Fried, were instead profiting from the scam. Not just a few of them, nearly all of them. From the news media, paid off by Sam Bankman-Fried, to the leadership of the Democratic Party, also paid off by Sam Bankman-Fried, to the chairman of the Securities and Exchange Commission, the SEC commissioner himself, Gary Gensler. They all knew that FTX was not a real company and that Sam Bankman-Fried was a fraud.
remember this. The only wrong exposure to Bitcoin is having 0% exposure, okay? Please remember that.
Bitcoin, you said you spoke at a conference, you bought it, you bought some of it for your kids last year. You more than doubled your money if you're still holding. Are you still holding? I mean, let's just have a little fun here to end the segment.
Yeah, I am. I'm still holding. My kids are very, very happy about it.
Yeah, what's Bitcoin's real role? There are members of Congress, both parties, I believe, that think it should be banned.
Yeah, I mean, they want it banned because they're being paid by BlackRock and Morgan and all the big globalist banking monopolies that are making money on inflation and making money by the Fed printing money. But American people, the American middle class, is getting rolled, and the off-ramp from that, from the money printing machine is Bitcoin. Because it is hard currency. And we need to make it transactionally available to the middle class. We need to make sure that people who want to protect themselves against inflation can have this, but also that they have transactional freedom. That the government is not, able now to digitalize our currencies like they did in Canada. Yeah. And when the truckers disobeyed, when the truckers protested peacefully, their bank accounts were shut down. And they couldn't pay their mortgages. They couldn't pay for their children's education. The government could control their speech by controlling their transactional freedom. And, transactional freedom is as important as freedom of speech. And you only get that from Bitcoin. We're not going to get that, as long as the government controls our digitalized currency.
This is the footwear of the central bankers of the world, okay? We live in a f***ing clown show, and your kids are going to suffer from it because of the idiots that are managing monetary policy globally. Why do I say that? Very simply, the debt spiral is unsustainable. It's only grade 11 mathematics, and it's like these retards. You're not supposed to say that, but I gotta call it out for the kids. Have not done their grade 11 math, okay? Horrible but true. They're compromising our future.
You can actually control and own your money. You can actually have your money, right? How else are you gonna have it? In cash? And then you gotta deal with the inflation? How difficult is it to move serious cash? I had to send, it's about 4 years ago, I sent $900,000 to Qatar for a completely legal reason.
Why?
I wanted to buy a property in Qatar. So I was involved in the purchasing of a property in Qatar. The backflips, the paperwork, the legal nightmare. I swear to God, I was put on a travel list because for about a year after that, I was stopped at every airport. Just for a bank transfer, right? No problem with Bitcoin, no problem. So it fixes a whole bunch of problems, cryptocurrencies. It certainly does. And I think a lot of people who are forward thinking and believe the things I believe in, it's the only logical conclusion. What else are you gonna do? Trust a bank? You trust them? There's nothing else to do with it. I'm actually at the point where, although I do own quite a lot of property, I don't want any more. And I keep getting offered nice property deals, and Tristan's like, should we buy this? It's like, no, I don't even trust the Romanian government or the Russian government. I have property in Moscow. I don't even trust the government anymore. I don't even want a property because if I piss the government off, they're just gonna take it. I don't own it. They say you own it until you annoy the government, then you don't own it, right? So I don't even want property anymore. I'm going full crazy Mr. Blockchain now because it's the only time I feel like I have control over things. And we're losing control at such a rapid rate. I'm trying to stay ahead of the curve. People saying, oh, I'll just buy a house and it's my little house. It's not your little house. You'll see how quickly they'll take your little house from you. Look what they've done so far. They've taken your business from you. You think they want to take your little house? People are not scared enough of the right things. They're scared of Corona. They should be scared of what the government did to them in the name of Corona. That's what they should be. But people aren't logical. People have low IQs. They're slaves. And they're too busy, preoccupied with racism and all this other garbage to keep them split so they can't all get together for 5 seconds and start thinking, wait, this is bullshit. You remember the big Bitcoin crash, $5,400 at the beginning of this Corona thing? When it really, really tanked. And everyone say, it's over. All this crap. I put a tweet up that I still retweet to this day saying, you're all pussies. Bitcoin's coming back. I think I said, I'm buying $600,000 today and we can talk when it's at 8,000. So I turned 600 grand to like $12 million. Because I had cash in a bank and when everything hit the fan, the first thing I thought was, I don't want cash. I want something else. Give me an asset. Okay, well, how can I get an asset that the government can't take? Bitcoin.
Let me explain something to you right now. Okay, here's a $10 bill. This is garbage. This is garbage. Your people in South Africa, you have your rand, right? That's going to zero. That's going to zero. This is going to zero too. Euros are going to zero. The yen's going to zero. The Chinese currency is going to zero. It's all going to zero against Bitcoin. If you don't understand that yet, you're going to be impoverished. You're going to be on the street. You're going to be begging. You're going to be out of business. You're going to be toast.
Max, do you know that it's a criminal offense to tear up?
Do you know that with the Bitcoin I have, I can buy any freaking senator or congressman I want? I make the laws. He who has the Bitcoin makes the laws, Rand. We're not going to just sit around and let the goddamn congressman tell us what to do. We've got the capital. We make the laws. We've got the Bitcoin. They don't. We got it. They don't. Do you understand?
You pledged to block a potential central bank digital currency. Is that about surveillance?
It's very dangerous. It's very dangerous. One day you don't have any money in your account. It can be a very dangerous thing.
We are now in a new era of wars, and unless we re-establish order fast, then we are doomed.
Yuval Noah Harari,
one of the brightest minds on planet Earth.
Historian, a best-selling author
of some of the most influential non-fiction books in the world today.
I think we are very near the end of our species because people often spend so much effort trying to gain something without understanding the consequences. For example, we will get to a life where you can live indefinitely, but realizing that you have a chance to live forever. But if there is an accident, you die, the people who will be in that situation will be at a level of anxiety and terror unlike anything that we know. Then you have artificial intelligence, and the world is not ready for it. It's the first technology in history that can make decisions by itself and take power away from us to hack human beings, manipulate our behavior, and making all these decisions for us or about us. Whether to give you a loan, whether to give you a mortgage, dating apps shaping your romantic life. But the real problem is that increasingly the humans at the top could be puppets when the most consequential decisions are made by algorithms. Global financial decisions, wars. This is extremely dangerous, but it's not inevitable. Humans can change it.
But with what's to come, are you optimistic about the future?
I'm very worried about two things.
Well, first of all, this is a dated slide, but look at your top left-hand corner. That's the total U.S. government debt. 30 trillion at the time of this slide. It's now over 31 trillion. But the relevant number is at the bottom right-hand side. $170 trillion of unfunded liabilities in the United States, one country. It will never be paid back. It is mathematically impossible to raise that amount of money. And every single government in the world has the same challenge, okay? $200 trillion combined of funded and unfunded debt. The U.S. will never pay back. You need to protect against the debt spiral. It's as simple as this. The average coupon on the debt that they are paying right now is about 1.5%. Guess what the Fed is doing today and doing for the rest of the year for sure? Raising interest rates, effectively increasing the cost of their debt so that it is unsustainable. If the USA were a corporation where I spent my life trading junk bonds, it would be rated CCC. One notch away from bankruptcy. Now here's the crazy thing. The US is the best horse at the glue factory. Okay? You guys in Europe are so screwed, it's not funny. I just can't say it any other way. Okay? So, grade 11 math, you will never pay back your debt.
So let's talk about Edward Snowden, because he predicts that some government is buying up Bitcoin on the sly as a replacement for monetary gold. Here was a prediction on X that he made this week. Prediction: a national government will be revealed this year to have been buying Bitcoin, the modern replacement for monetary gold, without having disclosed that fact publicly. Now, why is that a hot topic right now? Because Bitcoin is surging up to its all-time high of around $60,000 per Bitcoin after circling the drain for most of the pandemic. It seems to be back. So we're taking bets now on which country it is. Now, El Salvador President Nayib Bukele has been talking about the surge in Bitcoin this week and kind of taking a victory lap. Take a look at this. He says when Bitcoin's market price was low, they wrote literally thousands of articles about our supposed losses. Now that Bitcoin's market price is way up, if we were to sell, we would make over 40%, he says.
Profit.
Of profit, yeah. And our main source of Bitcoin is now our citizenship program. He says we won't sell, of course. And he says, remember this next time they spill lies about El Salvador. Look at what the Associated Press did with his CPAC attendance lately. They're saying he got a rock star welcome at CPAC. When U.S. investor Peter Schiff responded about this Bitcoin tweet, he says, you better talk about these profits after you sell and realize them. President Bukele says, just cry harder. So he's not having it. He's a bit, I want to say, kind of Trumpy, right? He doesn't suffer fools. He says what he thinks. He's a little bit rogue, right? Here he is at CPAC. I'm going to bring this back around to the Bitcoin bit because not only does he say these things about cleaning up crime, but he says these things about U.S. financial systems. And watch him drop these truths, and then let's connect it to whether or not this means that the U.S. may be buying Bitcoin on the sly.
When I talk to my conservative friends right here, they always tell me that the problem is high taxes. But they're wrong. Of course, high taxes are extremely high here in the United States. I give you that. You're right in that. But that's not the real problem. The real problem is not the high taxes themselves, but the fact that they are not even really funding the government. Not even those high taxes, higher than a lot of places in the world, not even those taxes are really funding the government. So who's financing the government? Government is financed by treasury bonds, paper. And who buys the treasury bonds? Mostly the Fed. And how does the Fed buy them? By printing money. But what backing does the Fed have for that money being printed? The treasury bonds themselves. So basically, you finance the government by printing money out of thin air. Someone could ask, well, so if the government can print the limited amounts of money out of thin air, why did they collect taxes? I mean, in theory, it would make sense, right? If they can print unlimited amounts of money, why would they need taxes for it? The answer is simple, but it's very shocking. The real problem is that you pay high taxes only to uphold the illusion that you are funding the government, which you are not. It's shocking. but it's true. The government is funded by money printing, paper backed with paper, a bubble that will inevitably burst. The situation is even worse than it seems, because if most Americans and the rest of the world were to become aware of this farce, confidence in your currency would be lost, the dollar would fall, and the Western civilization with it.
So that leads me to wonder, because we know that the US dollar has no foundation, whether or not Bitcoin is being bought up by the United States, as Snowden is talking about. And here's why. I explained this on Twitter yesterday, or X. I'd like it to present it to you now. Did you know that President Eisenhower campaigned with a promise to audit the U.S. gold reserves ounce by ounce? The audit was said to be finished just 7 days after he was inaugurated, but it took them 4 months to publish the report, and it was super fishy. According to the government's own press release, it said all Treasury employees participating in the audit were assigned to activities other than those on which they are regularly employed. That's weird. Why would they not have experts counting the gold? And they never told us how much they actually counted, touched, and weighed. By some estimates, it was as low as 5% of the U.S. stock. Now, experts say that at least 59% of the country's reserves flowed out of Fort Knox in the years since, and we have never been given a straight answer or an accounting. Why is that? And how did we get there? Now, a lot of this comes from this great book, Good as Gold, a fantastic book for a history of how the U.S. citizens were asked to give up their gold, how the United States gave themselves a big raise when they did that, and how then that they sort of pulled the rug out from under the U.S. dollar. I refer you to this. On April 5th, 1933, President Roosevelt, just 1 month in office, outlawed private ownership of all gold. Most in the hands of private hands was gold coins. He said the new decree was, in effect, a confiscation. Those who didn't comply were subject to as much as 10 years in prison and a $10,000 fine. Now, those turning in gold were paid the official price of it, which was $20.66. But as soon as they turned it in, the government raised the price to $35, basically giving the government a raise. They had something that was worth $20, and then they said it's all of a sudden worth $35.
Money is a store of value, and there are multiple monies, and they're not created equal. So let me give you the world's worst money. The worst money in the world is like Argentine pesos or Venezuelan bolivars or Zimbabwe dollars or Nigerian naira. Weak money. The official inflation rate in Argentina is 105%, but that's the official rate, which is that understates it. The actual inflation rate would be higher. And if the inflation rate is running 100%, that means your money is losing half of its value every 12 months. That means that within 10 years, you have nothing, okay? So bad money, bad currency or bad money loses all of its value over the course of a few years. In Venezuela, you lose all your value in 36 months. In Argentina, in 10 to 20 years, the Argentine peso was 1 to the dollar 21 years ago. If you had $1 million 21 years ago, the Argentine peso right now is about 480 to the dollar. So that's not a 99% loss. That's a 99.8% loss, right?
In how many years?
21 years. So what I'm saying is you don't have money if you have weak currencies.
Now is when you need to be panicking for money. Not when crypto was spiking and everyone was talking about it and every dummy was making money. Then it's too late. You need to be panicked now, make money now, stack your bags now. Stick to the basics, Ethereum, Bitcoin. The coins are not going to go anywhere. You should be panicked now to buy as much Bitcoin and ETH as possible so in 3 years you can guaranteed retire from life forever. You were panicking more to make money to buy crypto when crypto is reaching all-time highs than you are now when it's on sale. Think about how stupid that is. It's the same coins, the same infrastructure, the same ideals, the same technology. You need to buy now. So now is more important than ever for you to make money. Don't worry about crypto all-time highs and all that kind of crap. You need to make a bunch of money now, urgently, quickly, and start stacking a bag so when the all-time highs come again, you can sell out $25 million. The people who are not panicking to make money now to buy crypto that it's tanked don't understand the world, because those people were panicking to buy it when it was already at the top. That's when they really wanted to get more Bitcoin. Now it's down, they don't want to get it anymore. That is a big mistake. Now is your chance, ladies and gentlemen. I just said this inside the real world yesterday. I said it to all the students. You are making money at the most important time because the entire world is on sale. You need to make money now in the hard time.
That I felt drove a lot of interest in FTX. Sam Bankman-Fried is an American. His parents are American compliance lawyers. There were no other American large exchanges to invest in. If you wanted to invest in, we knew, for example, that Tiger.
This sounds like groupthink.
Did you know there was no CFO?
Right now, so
the money that you lost, was it?
I got you all set up. This will be over right now. This is just the pre-show, so just the countdown is
being a spokesperson for FTX, the 9.7. That was money they gave you, and then you lost. Did you lose any money of your own before you were how much? Before you were compensated?
How about that?
Well, listen. At the end of the day, but are you net down from your own net worth, or did you got the 15 million and you lost 9 of the 15 million? Down. I paid millions in taxes, and I hopefully can recoup those. I paid millions of fees to agents. Are you kidding? This has not been a great experience. But losing 15 million that he gave you to be the spokesperson is a little bit different than.
I listened to the interview that Andrew did with him
so
at
did
Real Book, and I thought that guy's a crook and a liar. You listened to it and said you'd invest money with him again if it turns out there's nothing criminally wrong here. What did you hear that I didn't hear?
It may not fit for Sam Bankman-Fried because we don't know the outcome of what's going to occur.
Yeah, but all I can say is everything he said. Oh, I just didn't realize. You didn't realize there was an $8 billion hole. You didn't realize that there was like clients' funds that were being swapped over there. It's not his fault. Like that to me is like, man, that guy is bad news. That's not just you had bad luck. He was lying and manipulating.
You don't know.
There's only one of 3 reasons that anyone on this planet ever dude. You're either lazy, you are arrogant, or stupid. Now, we'll start with lazy. Most of you are lazy. In fact, I'd say basically all of them. You don't understand what work is. You don't understand what work ethic is. You don't understand the ethos of conquer Earth. You don't have fire blood. You don't wake up to go piss at 3:32 a.m. and go, I'm not going back to sleep till I make some fucking money. So you're all lazy. You're all arrogant. Because when I sit here as the richest person who's ever fucking wasted his time talking to your fucking dumbass and tells you what to do, you don't fucking listen to me. Oh, well, Tate, maybe he's wrong about, you're broke. How can I be wrong when you're in the poor category and I'm in the rich category? I obviously know something you fucking don't. Arrogant dickhead.
I'm all about that.
And the third and least common category is stupid. Most of you are not too stupid to become rich.
No, I just got your.
I could show you how to do it. All you have to stop doing is being arrogant and lazy. So if you sit here and go, well, I'm none of those 3 things, yes, you fucking are, because you're not living the life I live. You are a brokey. If you were none of those 3 things, you'd be here with me in this room, wouldn't you? But you're not, because you are a fucking peon. So, look at your bank balance, accept it's not as large as mine, and accept that one of those 3 attributes must apply to you. Find out which one it is and fucking change it.
You're leading this country to its destruction. We've already lost control of the world. The American empire's in free fall right now, and we're going to lose the US dollar. And when that happens, we're going to have real poverty here, like Great Depression level poverty.
The third indispensable element in building the new prosperity is closely related to creating new jobs and halting inflation. We must protect the position of the American dollar as a pillar of monetary stability around the world. Accordingly, I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connolly to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States.
This guy was a major donor. According to the head of Citadel, defeating Donald Trump was literally on the balance sheet of FTX. Watch this.
FTX crosses into a zone that all of us are worried about. On the balance sheet of FTX is a line called Trump lose. And Sam was the 2nd biggest donor to Democratic candidates.
I'm going to leave it to everybody else to draw their own conclusions about what you're saying here.
Then the reporter says, we're out of time. We can't go too deeply into that. Really? Let's go more deeply into it. It's pretty interesting. So, of course, politicians love the guy because he was just a cash spigot, and that's what they want most. But where were the regulators? Because there is a government that's supposed to be independent of office holders, a regulatory state that keeps Ponzi's from happening. Where were they? Well, Sam Bankman-Fried was himself invited to Washington to consult on crypto regulations. And then he posed for a picture with Maxine Waters, who's the head financial regulator in the Congress. And then the Washington Post, which is the hometown newspaper of government, did no reporting on his actual business. They just wrote a puff piece about how cool is it that the guy with funky hair who can't sit still and sleeps on a beanbag is getting super rich.
What is up, Rumble? Welcome back to the Crypto War Room. I'm your host, Ryan Matta. Thank you guys for joining with us. I didn't know, I guess we had a hot mic going on there, so you guys heard a little bit of behind the scenes about what me and Steven were talking about, Bitcoin scaling solutions, Kadena. It's going to change the game. I am joined by one of my great friends. His name is Stephen Rothwell. Am I saying that right? Rothwell?
Stephen Rothwell, yeah.
Oh, you go by Stephen. Okay, Stephen Rothwell.
Yeah,
all right, my friend. Great to see you. Long time. I got an overlay that's dropping over here, but it just arrived. Cool. So I'll have his information on there. All of his links to Twitter and everything are down below in the description. Steve, why don't you give us a little introduction? Tell us who you are, where you're from, how you got into crypto, and we'll kind of go with it from there.
Cool. Yeah. So my name's Stephen Rothwell. I'm from Canada, up north. So neighbor to America. And I've been in crypto a long time. So I've been, I started out in the sports betting world about 20 years ago. So, little gray hair, you see. And, I learned about Bitcoin back in 2011 because bettors are not allowed to often use sports betting sites, of course, in America, right? Not until 2016 was PAPSA, which was the law that governed sports betting, was that repealed. So we weren't allowed to bet. And so to bet, we kind of had to be pirates. And we learned about Bitcoin back in 2011. Bitcoin was this nice protocol where you can exchange tons of Bitcoin. So back in the day, it was like, $20, and we were betting like 60 Bitcoins a bet, and which was crazy if you think about it now. But Bitcoin represented this amazing technology which allowed us to sort of circumvent these government regulators who were heavy-handed about letting American and Canadian sports bettors use sports betting networks like Pinnacle and various others in the world. So we were kind of forced to use cryptocurrency, and we were kind of the first users, sports bettors out there. And, like you've heard of Augur on Ethereum and all that stuff. And that's kind of how I got into the cryptocurrency world, is just sort of owning Bitcoin and using it as a medium of exchange, because it was very efficient to pay people when you owed money or to get money sent to you. It was very fast, and you didn't have to wait 6 days for a wire, which could be canceled at any time, and that's kind of how I got to know cryptocurrency. Me as a person, I started out in finance and computing, just kind of a science and mathy guy, but I really got attracted to the sports betting world and built up several companies, sold them, took one IPO in 2020, which was nice. And now I'm just kind of trying to build a decentralized version of that on the Kadena blockchain. So that's kind of my history.
And can you give us a little bit about the supercomputer that you worked on as well? So give people a little bit of your background and work history.
Oh, yeah. So I worked at a company called D-Wave Technologies in Vancouver here in Canada. So Vancouver is in the west side of Canada by Seattle, if you didn't know. And there was a company up there that got started by a guy named Jordy Rose. And what he did was he made the world's first commercial quantum computer. So you might have heard about that. It's pretty popular in the crypto space, quantum cryptography and all that stuff. But all it really is a computer. When you make it really, really cold and you dip it in liquid helium, it gets really cold, and it can speed up computations when it has these certain types of properties that emerge when you freeze it to like pretty much the coldest point in the universe. The known universe actually was in Burnaby, BC. That's like a little fact for you. There's actually no point in interstellar space which is colder than that point in Vancouver at that time. So we cooled that chip in liquid helium, and what happens is that chip can compute certain things a lot faster than traditional computers. So that company kind of took off, and it actually went IPO in 2023. So we waited 16 years to IPO those shares, which was painful. But that computer ended up being sold to Google. So Google used it, and various other laboratories like the Jet Propulsion Laboratory of NASA used it. So our work got used by NASA, which was cool, got put in the Computer Hall of Fame, which was kind of neat. So just working on that quantum computer, which is still is not, everything it's said to be, but it was really cool to work on that. And I learned a lot about computer science because I was a physics grad. That was my degree, just a dorky physics guy, math guy, right? But I got to work on this really cool computer, and that was quite a story. And now I think the founder is working on robots and everything. So that crazy experience allowed me to understand how to optimize things. And so I was in machine learning. That was my field in what I did my master's degree. And so I learned a lot about optimization and mathematical problems, just like Kadena, and they do a lot of optimization as well. And so I learned a lot about that and applied that in my field in sports betting, where I learned to beat the odds, which is extremely hard, by the way, one of the hardest problems there is. I learned how to beat the odds and to make money betting on sports, which is extremely, extremely difficult.
So let me say this, and for everybody that's listening, if you guys are new to the channel, Stephen is one of maybe 4 or 5 people in the entire world that can do what he does. And by do what he does, he says he beats the book. So you're the guy that goes to Vegas and bets and gambles for a living that can actually beat the odds. Steve is the guy that when Vegas wants to find the line on a game, they contact people like Steve, or they actually don't try to contact him. They try to find out where Steve is putting his money, and then they know exactly where the line needs to be because of Steve placing the bet. Am I saying that right, Steve?
Yeah, a little correction, if you don't mind. So I'm what's called an originator. So I use data science or statistical learning to learn. So baseball is my specialty. I learn how baseball works with mathematics. And so I'm the originator. And then there's a level above me called the mover. These are people with millions of dollars who pay for those odds. And they're the ones who go and move the bets to many, many accounts. So I learned all about the sports betting industry doing this and dealing with people who are far, far more wealthy than I am, although I've done pretty well. But, these people take my numbers and that they're the one who go and move into the sports book, because it's like a huge industry, Ryan. Like, we're talking a couple $100 billion a year in profit and probably a couple trillion in money moved every year, because it's one of the biggest industries and the most popular industries in the world, of course, right? We all like to bet. I hope you bet on the Lions this year, by the way, which was great, because I saw they almost made the Super Bowl, which was awesome. So I was really happy to see that. Yeah, so close. I mean, just so close. But it would have been nice to see that. But you can see that, there's so much money gets moved into these games. And so I'm the guy who does the math, and that gets separated from the people who move. But you still learn about the entire industry as a whole and how money moves. And it's this gigantic probably multi-trillion a year in terms of volume, just like crypto operation, which is worldwide. Every country in the world, every single one of them has at least a $1 billion operation in it. So that's kind of my place in it. I'm one of the few guys who can do the math. So you're right. I'm there's not too many people who beat the odds these days, because it's getting harder and harder over time. And that's just because people are getting smarter and smarter, better tools. Mm-hmm. So I still beat it this day. Not as well as I did 10 years ago, but not too many people out there who do the mathematical part. It's just very difficult.
And you were one of the first people that you got your hands on the pitcher data, right? Like they started recording the angle and the trajectory of the throw of the pitchers, and you were able to take that into machine learning and feed that to computers, and computers were able to basically statistically predict the outcome of games based off of all this data that you were giving them. The more data that you can give these computers, the more accurate they become, correct?
Yeah, that's right. We got data called PitchFX data in 2009. And now we had StatCast data in 2016. So these are different types of data that the MLB provides publicly that you can grab. But we also use image recognition technology, although that's kind of pretty common now. But we used to pull down from the actual feeds itself, the game. We can pull out data from that and kind of learn things about the game that people might not have. So to build an edge in sports betting, or in crypto, mind you, having data that nobody else has gives you asymmetric advantage. So if you have that data and nobody else does, obviously you can exploit it if there's predictive value in the data. You can exploit it, and people wonder what you're doing, and it lasts for like a year or two until they figure it out. And then obviously that edge erodes over time, and you got to find the new edge and the new edge. So just to give you an example, I learned that 2 years ago, I learned that painfully actually, that the balls in baseball, the middle of the ball, they changed the rubber in it. So they wind a bunch of rubber around cork, and it's really tense in there, right? So they changed sort of the nature of the ball. So the ball started flying out more, like, because I guess they're trying to manufacture more home runs, make it more exciting, right? So what I noticed is that home runs were just up 40% randomly one year. And we couldn't figure it out, but I was one of the first people to figure that out and exploit that, just because I'm always watching 24/7 what's happening in baseball. So when we learned that they manufactured a new ball, we bet that for about 2 months, and you can make a killing. So you're always trying to find an edge like that, right? Trying to find new data. Yeah, whether it's physical data, like you're saying, like you can grab it from the baseball database itself, MLBAM database it's called, and you can get the physical attributes of like the trajectory of the pitch and all that stuff, and you can feed that and try to find an advantage in that when nobody else is really looking at that. But you also have a subjective side where you're always keeping track of injuries, and you're keeping track of rule changes, things like that, and try to guess how it's going to reflect in the outcome of a game, and see if they're not pricing that into the line. Just like crypto, like when you're trying to price in, let's say, Gary Gensler's decision into the Bitcoin price. It's the same idea.
Yeah. So let's start back. I mean, how long do you got, Steve? You got an hour or so that you can give us?
Whatever you need.
Sweet, man. All right, let's start from, Steve was on my show almost every day, and I think we were so gassed up about the Kadena blockchain, and the more we started kind of getting behind the scenes of things, we started to realize like this blockchain has more potential than any blockchain that we've ever seen in our life. But at its current status, we knew that it was very, very early in its development stage. It had a lot going on. So why don't you walk us through, you had got to a point, you got frustrated, you couldn't get support from the team, and that's where we're starting to hear like the new Kadena. So the old Kadena is what we were talking about when they didn't have proper staffing or they didn't have the right people in place to communicate with the devs that were building. That's all changed now. Obviously, you're back over here building on Kadena again, same project, same idea, same concept. What has changed? And tell us a little bit about what you were getting frustrated about, and then tell us what you're seeing now that you're back in the game.
Okay, so that's a pretty big question. So if I ramble on, just
I got you.
Me, okay. So yeah, circa 2021, I came around with a pretty elite team. I think you met them all.
Oh, and yeah,
Ryan, you really knew their stories,
killers.
Yeah. And we tried to bring that to Kadena, and we couldn't get in touch with what's called Kadena Eco. Now, this is not Kadena core team or Kadena coders. This is a business development branch of Kadena. And we got pretty frustrated because we could have raised venture capital on Kadena, and we were trying to use a certain technology on Kadena that just kind of wasn't a priority of the Kadena team. And we personally didn't understand that. We didn't understand what was going on internally with Kadena. And Kadena had a lot of problems with communicating with their community. And as you know, Ryan, I mean, I watch you for many, many years now. Well, I guess 3 or 4 years now I've been watching you, even before I met you. And you're always talking about different coins, and you're educating people on different coins. And I think you understand that community-first projects always win. If you build look at Caspa, which I consider a useless coin. It has no use. But, that's just my opinion. If you like Caspa, forgive me, but it has no real use. And you see Kadena has all of this use to it. It has a beautiful smart contract language, a beautiful technology called Chain Web, which basically secures your smart contracts, and it gets more secure as it grows, as the chains multiply, because Kadena is a braided blockchain. It braids all those individual chains. Each chain is like its own Ethereum, a little more efficient actually, braids it all together and keeps gas low. So you have this wonderful blockchain technology, but it hasn't grown. And then you see like this useless blockchain like Caspa, which can't scale, by the way, has no chance. The minute you introduce gas or smart contracts, it can't scale. And it grows like 1,000x or something like that. And you get frustrated because Kadena is not a community-first team at that time. Okay. Mm-hmm. So in 2021, we didn't understand that. And we got pretty angry because we could have, I did, because I lost some friends.
I was there with you, man.
I know. It hurt. And I'm going to say that just particularly it hurt me because I brought in some friends who were kind of elite C-levels in the sports betting industry, and I burnt a lot of social capital. And I just couldn't talk to the Kadena team. And I learned it's because they're a little wary about sports betting, which is fine because it's a highly regulated space, right? And for us, when we're building on Kadena blockchain, we have to be licensed, and you have to do everything by the book, by the law. You can't be an illegal black market. These kind of operations existed in America. You might have heard of Calvin Ayre, who's a very famous in our space in crypto. He ran an illegal sports betting operation. He can't come back to Canada. He's from my neighborhood, by the way, here in Vancouver. He can't come back here ever again in his life without risking going to jail. So you have to do everything the regulated way. And we didn't understand that in Kadena's point of view because there's no communication. Mm-hmm. And I learned that there was no communication because their team was incredibly small. And some of them were burning out because they're trying to keep this blockchain alive and trying to build revolutionary technology. And I'm going to say that it's revolutionary technology. Kadena, really, it's like Bitcoin, but I think even better. It's not meant to be a store of value. It's meant to be a beautiful computation engine for people like us who want to build apps on it. And so the kind of that story is like, I kind of got really sour on Kadena and negative and fudded. And just because I wanted it to work so badly at that time, it just wasn't ready yet. So I let it go eventually. And, I let it go, and that's okay. And I'm not a great person, I'm just a person, and I made some mistakes and I fudded them and all that stuff. But I came back to it because I learned that the person who was, causing a little bit of problem, we don't need to say any names or anything like that, but there was some problems with a person who wasn't really treating business development right. And then I learned this guy called Mike Haran came on to Kadena.
Top G.
And when he came on to Kadena, oh man, top G, you're telling me. You just
you got something in your background? Something
so.
scratching on the floor or something? Sounds like something's going on.
Could be my
your cat. Oh, that's all right. No worries.
Yeah.
All right, this one.
Sorry.
No, you're good. Just a cat.
Sorry.
Yeah, he needs to hang out, man.
So sorry about that.
No, you're good.
So just to finish that story off. So this guy comes on called Mike Haran, and I see already that there's a change being made in Kadena. That is the CEO is making a demonstrable change where he's starting to take the community seriously, community first. So the price at Kadena plummeted 98% because they're not growing their community. They're not listening to them. And the value of any blockchain is proportional to the square of the number of people holding. That's called Metcalfe's law. And so when our community gets really tiny, the valuation goes down. And that's why Caspa explodes. But now we see we have a proper chief marketing officer here. And I talked to Mike and I actually gave him a lot of trouble. And I said, you're not paying attention to community or price or the things that people actually care about. Crypto Twitter, your reputation stinks. And so that was a bit contentious, but he listens. He listens and he executes. And he never has lied even once. When before you might have heard a little bit of a fib from a couple of people on the Kadena team. So you have now a serious professional in charge of the public face, which is one of the most important things in any cryptocurrency. You must represent yourself not only professionally, but have a community first attitude. And so when I saw that, I knew right away that I wanted to bring back the project that I left. And I brought back, a couple people, so James and Sam from before, but a couple new people as well, to kind of fill in those gaps. And now we're approaching things a little bit differently with our project KDA Bet, a betting exchange or a betting protocol on Kadena. But we're now supported with a community first actor who takes Kadena seriously and listens to everyone, even the most vitriolic and angry people he still listens to. And when you have that type of thick-skinned person who can hear the problems and work to execute on them, execute on solving these problems, you have the ingredients for an explosive blockchain experience. And I mean that in terms of price. We can say that here, right?
Yeah. Oh, absolutely, man. We can say that. I'm not sponsored, but that's my favorite thing about Kadena. I absolutely love them. Everybody's like, oh, you're sponsored by Kadena. How much are they paying you? I'm like, they're not paying me shit, dude. I fucking own 100,000 Kadena. I want nothing more to see than see this thing succeed. Kadena doesn't need to pay me. I mean, price goes up and does a 10x, I'm a millionaire, like I bought my own Kadena. Exactly. I don't need to be paid for them, and I don't want to, because then I can't have conversations like you in the open. I can't tell them to fuck off when I get pissed, and I can't tell them, I can't talk about price when price is booming. I mean, what kind of horrible position does that put me in, So yeah, go ahead. Sorry,
yeah, exactly. Yeah. So, I mean, I totally agree with just what you said there. I mean, we should be able to talk about price, but unfortunately, Kadena is in New York, so they're a little bit limited in that aspect. But
dude.
Yeah, but I'm in Canada, so I could talk.
There you go. Yeah.
That's okay. Yeah, Canada's nice. So, so for me, I see a certain maturity come not only in the technology, because if you don't know, the Pact team run by Emily Pillmore is absolutely on just full cylinders right now. They're getting everything done on time, and that's a remarkable change in getting it, because they got nothing done before. Now they are giving deadlines and hitting them. Particularly the Pact team, the Pact core Pact and Chain Web team. You're just seeing 1, 2, 3, and they're just hitting every cylinder properly now. So now you're seeing the emergence of a professional software team, but also a professional communications team. Yes, exactly. And even today, we had the founder himself, the CEO, come on to Telegram just to hang out with people. And so that type of social glue, like I always say that blockchains are social networks first, technology second. And I think that Kadena finally gets that. And so I see now the emergence of probably the dominating POW blockchain, period, except for Bitcoin. Of course, Bitcoin's always number one, but we're probably going to see Kadena take the helm here pretty soon. And that's just my personal opinion.
Yeah, you had said that Stu went in the dark for like 2 years. It was the first time he emerged, and now he's back out. That's awesome, man. Hopefully he keeps coming back out. Like you said, when people get to sit there and interact with the founders, it really goes a long way. I mean, people are still talking about the interviews I did with them 2 years ago. And, like you said, that builds the community, and the community builds the crypto. So where are you seeing from a tech standpoint? I know I was going and trying to teach myself coding. You watch me do it live on YouTube, trying to teach myself how to code in these old, outdated coding languages. I had them on last night. They told me that things still just kind of weren't ready. And I know Randy was promising that, we would have these digital courses in 6 months. And I mean, I build digital courses. They're not that complicated to build. I know the Kadena ones are really well put together, so those might be a little bit more difficult to build. But is it Pact constantly changing? Is there any reason that you see why we don't have a full step-by-step Kadena digital course out already? What's the status on that?
No, actually the opposite. Pact and Chainweb are always upgrading and getting better, but fundamentally Pact is a mature language. Okay, so I just want to make a particular point. The founder of Kadena is not a computer programmer. He is an artist, and he built a piece of art in terms of Pact, because in 2021, I didn't know that quite so well. Like, I knew a little bit about Pact, I played with it, but now I'm 2 smart contracts in, serious ones, and I'm pretty sure it's the best smart contract language in history. I'm pretty sure. The reason why is there's so many benefits to it. When you learn how to build in this, because I built Solidity. I built Solidity at Fans Unite in 2017, 2018. It was a nightmare. It's a nightmare. And when you learn Pact, it's hard at the start. But when you get it, you start to understand that you can build 3 to 4 times faster than any Solidity dev, because it's a principled programming language that restricts you from doing things. Now, I heard you on it. I watched you and Amir talk yesterday. Now, Amir is a great coder and a gentleman and an ambassador of Kadena. So he already said many things. But I just want to particularly point out a point that he quickly talked about last night. And he talked about this idea of Pact being much, much faster to deploy things when you get it. So, there's a lot of problems with documentation right now, of course, but I've seen some things. Amir wouldn't tell you about it, but I will. They're building this whole academy, Ryan, with coding tools that allow you to experiment with sort of the flow of how to build smart contracts on Kadena. So it starts out, you build a simulation in this thing called a REPL file, and then you simulate what it's like to make transactions on the blockchain. Then you move to testnet. Then you test everything in a non-real space with fake coins, and then you move to mainnet, right? And then everything is like principled in terms of a software engineering paradigm, right? You have unit testing in the REPL. You have even more testing to make sure that everything works in a live situation, and it goes live, and then you know everything is going to work the way that you intend it to. There's two reasons for that. One, the smart contract language Pact is reduced in its, applicability to the various things that you might expect that you would want to do in a functional programming language. So Pact is functional programming language, okay? Where Solidity is imperative. So lots of ifs and elses and conditions and things that can mess up and get your wallet drained, not allowed in Pact. And you were talking about that yesterday, Turing incompleteness, and you were which doesn't allow recursion, and it has all these properties which limits what you can do. So when I was first learning Pact back in 2021, and even this year when I was making the smart contract for our NFTs, I was really angry because I couldn't do certain things that I'm used to in a programming language. I'm like, who is this guy, and what is he coding? I don't understand. I can't do things that I would normally do. Like, for instance, I want to pull out the keys in a map where you have key value, like, first name Ryan, last name Matta. And maybe I just want to pull out the values. And I couldn't do that in Pact. And then after a while, in talking to some of the more experienced Pact programmers, I realized this is on purpose. So what Stuart Popejoy did was he made a language which limits the things you can do on purpose to make it safer and quicker to deploy things. And not only that, it makes it less likely for hacks and wallet drains to happen, because that limitation allows you to just focus on the things that you need to do, which is transacting on the blockchain, or simple things like recording things in a database, like your NFT address and your token, your NFT wallet address and the token in it. And maybe you just want to transfer that over. So that limitation is actually extremely valuable because it focuses you on particular things that require just transactionality, which is what Kadena is designed for. It's this massively scalable horizontal plane of individual blockchains, which you can deploy all of your contracts to, chain 1, chain 8, chain 20, whatever, and it can grow and it can scale. And it just limits you to focusing on transactionality for a digital world that is growing into a decentralized world. So this is good for things like, exchanges and, dealing with stocks and assets, where Ethereum is more general, right? You have you can do all types of things in it. It's a more of a general, I think it's Turing complete, I believe.
Yeah, it is.
So, yeah, it is. So you can do more things with it, but it opens you up to more mistakes and problems and difficulties and extended development times, which is not what you want when you're trying to build a smart contract language for the development class. So I see that now and I go, oh, wow, Pact is kind of like a work of art. And this guy is totally misunderstood because we try to get on Kadena and there's no documentation, or it's getting better now, but there wasn't a couple of years ago. And so we can't get our smart contracts off quickly because in Solidity, you just copy paste, boom, boom. And you can pretty much get 98% of your smart contract done. Well, now we understand what's really going on. You have this really powerful limited system which protects you from making critical mistakes and is just focused on transactionality. And that's a very, very powerful thing. And so that's kind of the Pact journey and the Pact story. I learned a lot about it. And I think that is one of the most powerful aspects of it. Once you learn it, very, very fast to get to product. And that is what creates the ingredients for an explosion in cryptocurrency, in my opinion.
And I'm sure you've had a little bit more experience probably than Amir working with this AI. Was I far off the mark? Like, it just seems like if I can teach a computer to learn and learn when it makes a mistake, and then you have something like Turing or like formal verification where it's saying like, hey, this is your mistake, not just this is your mistake. Like, I was able to see the mistake and then it was prompting me and suggesting how to go about fixing that, where it could easily read something, make a mistake, go, okay, if a mistake is made, then I look here for solutions. I try to execute solutions. I try to run it again and try to reload the REPL, and then I get a result, and that result is either 1 + 1 = 2 or it's false. And then I have to so why couldn't you teach, a bot to build, like, you know, like, it seems like you get to a point where like, oh, I want a DEX, that there should be a process on how to build a DEX or how to build a wallet or how to, you know, do a specific ring signature so you can hide transactions and be completely anonymous and interact with Kadena, which I don't talk about too much because that'll probably get us in the timeout zone with the Genslers of the world. But, you know, is it possible to teach something like AI to code in Pact?
Yeah, I think so, actually. So I was listening to that yesterday, and probably the missing piece was that, you know, statistical learning in terms of applying language to, what you're doing is you're applying a particular type of machine learning model to some data, and the data is smart contract code. And so the only limiting factor here is that you just need more Pact smart contracts. So right now, you probably couldn't do it right now because there's just not enough there's not enough material for it to learn from. It's statistical learning. So it needs statistics, which means you need many contracts to learn, because statistics is, you know, you're learning properties of a group of some object or some parameter, you know, and there's some properties of that, and you're trying to learn what the statistics are by, you know, saying something about the distribution of, you know, some parameter or some value or something like that. So, like, I guess for me, what I would like to see is more smart contracts being made. And when you have more and more data and you feed that into your LLM or your language model, whatever you want to call it, you're going to learn a little bit more about how this language works. And now let's kind of relate that to what we were just talking about. When you make the language simpler and you reduce the things you can do with it, you learn a lot faster. There's a faster learning rate, because learning Solidity, it's going to take a lot longer because there's more things you can do. So when you limit the scope of things you can do, which is what Pact really did, what it really is, all you really need is more data, and then you can learn more important concepts like building a capability, for instance. So capabilities are just a little trick of code in Pact where you can basically limit some functions in the smart contract from being accessed by outside people. Just your key can access that, you know what I mean? And you can make that quite complex, that logic. So all you really need to teach it to build this type of access logic for certain functions in your smart contract. We call that internal and external functions, right? External functions, you, Ryan, can go to my smart contract and look at external functions because they're available to everyone.
Yeah.
But the question is, you know, what functions should be internal? And sometimes you would like a computer to learn that, you know, and basically say and suggest to you, maybe you should make this internal because there's a coin .transfer function in it or something, and you don't want any rando, you know, using that or anything like that. So all we need to do is just to have more contract data. When you have more data, there's a better chance that you're going to learn something important about smart contract structure. So it's just a function of inputs right now, because LLMs are pretty mature. As you can see, when you use Bing, you can get it to, you know, recognize what infinity is. You can do all types of things, and you're like, whoa, you know, a computer can understand that? Of course it does, because it just has enough data to make these relationships between words and context and some sort of result that you're looking for. So let's just get more contracts built, and it'll get better and better over time. It'll learn. That's the whole idea.
That's freaking badass. Do you want to, I know you really want to talk about Bitcoin and scaling. We were kind of talking about it during the pre-show there. I'm super excited to hear about it. You want to tell us about your project first, or do you want to go into Bitcoin?
Yeah, do you want to get Kitty a bit out of the way, and then we can
Let's do it. Really, yeah, absolutely. I want to hear all about it. Yeah, so tell us about it.
Yeah, okay. So Kitty A-Bet is a project on the Kadena blockchain where we're trying to decentralize a certain aspect of sports betting. So in sports betting, kind of one of the problems is that if you're a winning sports bettor, you immediately get banned and thrown out of the casino, or you're not allowed to bet online, or your account is limited so you can bet like $2.98. Like I can't even buy a Slurpee for that anymore. So like, you know, I think on William Hill, I can get like $13 down before I'm cut off, because they just track if you're a winner. How they track that is that if you get to better them on the odds, they mark that down, and then suddenly your account goes to zero and you can't bet anymore. And that's how these bookmakers make so much money, is because they only allow losing bettors, right? which I guess is part of the business. Like, you have to have losses to make money. But they take it really to an extent where, you have Denise Coates in the UK. She has $1 billion castle. She's like Downton Abbey, right? Okay. She's like the Downton Abbey of Downton Abbeys. And and you realize that these people are just extracting all the money from you and giving nothing back. And then they tell you that if you're a winner, they just kick you out. So you can't even hope as a sports bettor to be a winner, because these companies are just practicing pretty much a sharkish nature when they're dealing with their customers. And that's not going to change. It's just getting worse over time. And the problem is that the power in these sports betting companies are centralized into the regulator, the lawyer class, and the C levels, and they control everything. So if you're a player and you're upset with them, they'll just boot you out. And so what's happened is, in the blockchain space, we see a lot of projects kind of arise. We've seen Augur on Ethereum back in 2014. You see BetDex Labs on Solana, and you see a lot of different sports betting operations like Stake, for instance. They're very famous with Drake and all that. And you see a Shuffle, and they're all rising up and building casinos basically on Ethereum, are the most successful ones. But what they do is they still have a central structure where they're extracting all the money from themselves and giving nothing back to the community. They tried to pretend they give it back to the community by airdropping some tokens, which is nice if you get it. And they also give you some NFTs, which give you a little cut or something, or a little bonus when you bet or something like that. But the idea is they're still extracting $1 million, $2 million a month, every month out of the blockchain, and that money never comes back into the blockchain. And so we realize that that's what Stake and Shuffle are doing, and that's fine. They're great entrepreneurs, and they're living the American dream. And who can fault them for that? However, for me, I'm a bettor. I'm a bettor, and I care about bettors. I always have, always will. And we wanted to build something which decentralizes, not like nodes, or is decentralized by having a currency which is held by many people. We wanted to decentralize the ownership structure of an operator and build the first ownerless sports booking operator. And when we first did this in 2021, we were going to be centralized, okay, in terms of ownership. I was going to own tokens, and we were going to be in charge pretty much of the company behind it. At KDA now, there's no company at all. What we do is we decentralize the ownership by building NFTs on the Marmalade NG standard, which is amazing, by the way. You should really, hopefully one day you can talk to Pascal, which would be great. I don't know if he would come on the show or anything, but he built an amazing engine called Marmalade NG, which is a principled NFT standard, which allows for royalties, marketplace feeds, lending protocols of your NFT. So you can lend your NFT out and get it back at a certain time. It's all there. And you have this wonder, you can blacklist things. You can, oh my God, you can make your own custom policies if you want. So when we saw this, we built an NFT, 500 NFTs on this system. And we gave those for $300 each to each KDA community member. And we have about 250 community members. You're, King Matta, you're one of them as well. So, and what we do is we decentralize that ownership structure. So now when money comes into the sportsbook, instead of extracting the losses, which is how the sportsbook makes money from losing customers, that's the business, you're extracting that money, and instead of putting it into the pocket of a CEO or into the pocket of a venture capitalist, we 100% distribute that money back into the community as a feedback mechanism. So we're building a casino to draw outside money in, the casino sportsbook, and then 100% of that profit gets distributed right back into the community. Now they can go and sell that coin for their own profit, but I think what will happen is that community will keep that money in the community and build other projects. So it's the first of its kind, an ownerless sportsbook, which is a feedback mechanism. And that feedback mechanism is designed to help Kadena have more buying pressure on the token. And if you build a successful casino, you're pulling, I think the Stake does, 30 million a day or something like that, $30 million in transactions a day at 2 million profit. Like, they're doing like a lot of profit. So that's what we kind of want to build here, a decentralized experience, which truly is cypherpunk in its nature. Like, we don't want to build yet another centralized operation, because when you do that, they'll end up disrespecting sports bettors in the end. This is a protocol where anyone can bet. And, that entails risk for us because we got to put our money up against great bettors if they come on and all that stuff. But we hope that we can build that balance and then bring that to Kadena. You know what I mean? Yeah, go ahead.
And what is that? No, I wanted to ask more about that. So how does that work? How is this going to work? You guys, I know last time we had talked about building out this limit order book. What's the status of that? I know that was going to be like a huge, huge feat. And that's why one of the things that you were upset about, you're like, hey, I'm going to build something and it's going to be open source. And this tool and application that I'm going to build will be used in, countless thousands and thousands, even big finance projects. What is that looking like right now? Yeah, that was unfortunately related to this technology that Kadena had called Kuro. Kuro was a very nice technology which basically runs these nodes off the Kadena L1 and connects them together through this thing called a BFT raft algorithm. That's a Byzantine fault-tolerant raft algorithm with a few extra bonuses that sort of Kadena added on there. But Kadena decided that technology just probably wasn't the right way to go because they wanted to go with ZK technology or zero-knowledge proofs, which is another way to build scaling L2. And they thought that would be a better way to go. So when we were trying to use it, no support, nothing was getting updated. And so for us, we saw that the exchange model probably wasn't possible in Kadena at that time. So what we did was we put the exchange model where you have, say, Ryan here and Stephen here, and we meet our bets and we match our bets up, and then the exchange takes a little fee. Okay, and that's the exchange model. But now we're doing a bookmaking model where we take on the risk of taking bets from people, and we take a little fee from each bet. That's the traditional American bookmaking model, European too, I guess, but we'll talk America here. So I think that that fits Kadena a lot better than the exchange model because all you really need to do is just use the chain, and each chain has a 30-second finality time for single chain operation. It's great. So 30 seconds is perfect. And 30 seconds, by the way, for any scale. So as Kadena scales, it's single chain. So as long as you're not doing a cross-chain transfer, it's single chain time is 30 seconds. And that's a property of the Kadena chain web. And that means that no matter how big it grows, it's always going to have a 30-second time, which is perfect for betting. Because I'll take a bet from you on the Lions, right? I hope you're betting on the Lions next year. Mm-hmm. You can bet on them. And in 30 seconds, you're going to get your confirmation of that bet. And that's a great time. And hopefully they can even get that smaller, which would be great. So, you would see that taken instantaneously. But for me, it's just 30 seconds as an operator, done. And then your money's in escrow. And then if you win the bet, you get the bet and the payout. And if we win the bet, we get the amount staked, right? So that works perfectly on a single chain environment, which is what Kadena is. It's a bunch of chains that are single blockchains. Each one of them has its own blocks being produced and just doing its thing and making its chain of blocks. But then they get all tied up into a single Merkle root, and then it confirms all the transactions on all 20 blockchains after a certain period of time. Kind of the neat thing, though, is that if we needed to scale, so say we put all of our sports on one chain, say chain 17, okay? Mm-hmm. We put all of our sports on that, and then we clog that chain up, okay? There's too many transactions. The blocks can't produce fast enough. Easy solution on Kadena. I'll just go to chain 18. So I'll take half my contracts and put it on chain 18, half of them on chain 17, cancel the ones I took off chain 17, and now I have double the throughput on Kadena. Now that's perfect for sports betting. So I could put FIFA on chain 17, I could put basketball on chain 18, I could put hockey on chain 19. And if I need more chains, what happens? They just scale, right? It doesn't take long for Kadena to do that. That's less than a day. So they'll just fork and scale the chains. So what that means is that I'll never, ever have a clogged chain like Ethereum. I'll never have angry users getting all mad. They can't transfer their coins to make a bet at a sensitive time when they need to. It's just 30 seconds, right? As long as they're on the same chain. So it's pretty fast on Kadena. And the great thing about it, and the great thing that many people don't talk about on Kadena, is that by having this throughput and this horizontal planar scaling of the chains, so you can go to chain 50, chain 100, you could grow these chains. When you do that, you keep the price of gas down.
And that's what bettors want, because they don't want to bet $100 and then pay $100 in gas. Why did I even bet? So on Ethereum, that's the reality. If you're not betting big, like $10,000 aside, and you're just a little guy from, say, Mumbai betting on cricket or something like that with like $3, you're paying more in gas than you're even winning. But in Kadena, you can always keep the gas price pretty much constant by, I think that's a property. You keep it constant by growing the number of chains because it's related to the throughput.
Yep.
And so not only do you get unclogged chains all the time for any sport, which is very important when you have things like World Cup or NBA playoffs, you get a lot of volume coming in all at once, just comes in, right? Well, that's always going to be fast and snappy and quick to have finalization, and it's also going to be always low gas. That's Kadena's real superpower. Where Ethereum, it's just really dependent on the traffic going through the network. Same with Bitcoin. So that's why Kadena is utterly superior. Yeah.
I just onboarded a guy about 5 days ago. His name's Hernando Arce. If you guys are into the boater stuff, he's a great person to follow over on X. And got him $1,000 of Bitcoin, or I got him $2,000 of Bitcoin, 2,000 of Kadena, and 1,000 of Flux. And just to withdraw that $1,000 in Bitcoin. Another guy, I was buying some suits from him. He's a guy who made a bunch of money off Kadena back in the day, and he followed the channel and he sent me some suits for free. So ever since then, I've been like, oh, I got to go buy and spend some money at this guy's shop because he sent me all this stuff for free. So finally, I got around. I reached out to him and said, hey, you take crypto? He said, yeah, I'll take crypto. I was like, sweet, I'll order some suits right now, And he, right now, he's not big into crypto. He just knows enough. He's having a hard time even finding his TRC20 versus a ERC20 address. So just to give you an idea of his knowledge on crypto, and he's like, well, how about Bitcoin? I'll just take Bitcoin. Because I was like, I'll send you whatever you want, and not thinking that anybody's going to actually want me to send them Bitcoin. He said, well, I'm sending like $5,000, and he's like, well, let's do a small test. And I go, dude, I need your TRC20, and he can't. Like, he's having a really hard time finding it, but. Like, I can't test and send you $5 worth of Bitcoin because it's going to cost me $45 to send you $5. Yeah. It'll cost me $45 to send you $1 billion. Oh, it's 60 right now?
Yeah, and KuCoin just cost me 60 today.
Jeez, oh, Pete, dude. That's so much money. And it's such a horrible onboarding experience for people. And I know you wanted to get into scaling, so let me cap that conversation because I wanted to show people these kings. So you allowed people to basically create their own artwork, right? So this wasn't like you needed to have a specific rarity to these. You could design whatever you wanted using these AIs. They made me the king of Congress. It's the wolf sitting there surrounded by a bunch of sheep congressmen, right? I really like that one. I appreciate the artwork's absolutely flawless on these. You guys did a really, really good job. You designed mine for me, but a lot of these people were able just to mess around with the AI and create. I mean, this artwork is insane. Like, what's going to happen to NFTs with AI it's a game changer.
AI has come a long way. So this is all built on DALL-E 3, by the way, which is a machine learning model for image generation. It's the most modern image generation. Well, I think maybe the other Midjourney is beating it now, but it was pretty modern at the time. So when it first came out, within 3 days, we were the first NFT collection in the world to be completely auto-generated by prompts. So what we did was we built a little machine learning algorithm to basically get the right prompt. So like with yours, we went through many iterations, right, as we were trying to get the art just right. Yep. And so what we did was we made a standard called the king, which is either you're sitting on a throne or there's a face. And there's different types of kings which represent the personalities of the people who are owners of this new casino sportsbook. And so we did that fully with AI. So every last image here is AI generated. There's no handmade art. And, some of it is a little funky. Some of it is very, very good. And what we did was we taught the Bing AI to basically extract a certain style of image, a certain level of quality by keep changing the prompt in little ways. So it's very sensitive to little bits of language. Let me give you an example. So if you want a very cartoony picture, what you have to do is, so say that, that's a pretty bad name, but the cat one there, I won't say the name live just because
King Pussy, you can say whatever the fuck you want on here.
Sorry, it's a little crude. I'm Canadian, by the way. So
you got Canadian are all nice and polite, man.
So you see those big eyes. So what you do is in the prompt, you can say, make an image of a cat in a spacesuit sitting on a moon with the KDA flag, but make the eyes big. And when you say make the eyes big, what it does is it draws in Disney images, because Disney images are cartoon characters with over exaggerated eyes. So it pulls in a corpus of images to basically learn from. And then you realize that when you use different words or different combinations of words in different ways, that large language model builds you the type of image that you're looking for. So some of these images took 300-400 iterations on Bing to find, because it's very difficult to. So you can see Queen Costa is very like Disney, right? Right there. And then the Glass Queen, that was a very difficult one to make. So it's just learning how this AI wants to interpret words and find context in those words, because you're giving it paragraphs, many sentences, right? And then when you do it in just the right way, the quality comes out. The quality comes out of the image. So, you got some which are handmade, some made by us. But in general, I think we're the first NFT collection in history to use a full AI, a fully AI generated, corpus of images. It's the first one to use Bing, by the way. I think we're not the only ones anymore, but it was amazing. And now you have Amir on Kadena with Kadena AI, who's automating all this. So he's as well learning how to do this and help you generate collections of your own NFT on the Marmalade and NG and V2 standard. So he's allowing you to build these things without any knowledge of how to prompt engineer or anything like that. And I think within 6 months, you're going to see on Kadena people coming on. And by the way, all those NFTs cost me like $1.19 to make in gas, if you can believe it. It's pretty cheap. So I didn't pay any gas for that. It was just time. And what we're going to see on Kadena is this beautiful standard with royalties and marketplace fees and everything you can ever imagine that Ethereum doesn't have or struggles to have, but automatically make it in less than a day. So you can be just some schmo Joe, right? And make these things.
That's for people that don't understand this, explain to them. So I told everybody last night, like I spent 2 weeks trying to go down the how do I code in Solidity rabbit hole, going through YouTube playlists. And I forget the guy's name. He's pretty big in the industry. He teaches a whole course on, hundreds of courses on how to code in Solidity. He's probably one of the, original OG YouTubers, built a channel around coding. And I spent a couple of weeks doing it. And then just to come to find out, like, this is so far above my head and the amount of time that I would have to put in to learn how to code an NFT collection. So then I found the #1 NFT artist on Binance Smart Chain. So this was a guy, I forget his name now, and I apologize for that because he might be watching, but he was the #1 artist. So I was like, okay, instead of me trying to code and learn myself, I'm going to find somebody that does this, right? And he had released more NFTs on Binance, I forget, but he was charging about $10,000, right? He would do the artwork for you. He would find a coder, because he wasn't actually coding them in himself. He was hiring somebody to do the back-end work, and then he was managing the collections for people, right? So
yeah,
like the complexity for the average person who goes, I'm really talented at art, or I have this, unique card collection that I'm going to mint out, or I'm launching my own gym and I want to have a one-time, initial opening where anybody that, buys a $200 package actually gets a membership for life, right? And that membership becomes an NFT on a blockchain. Restaurants, we're trying to do gift cards, right? Where you spend so much money and it tracks it, and then you get, these NFTs after you spend so much money, and the NFTs get you 5% off appetizers or 10% off, right? And they were all doing it on Ethereum, but it was literally costing this one girl that owned a restaurant in California. It was costing her more money just to mint the NFTs than it ever would have been a discount for the customer. You know what I'm saying? So it just wasn't feasible. So can you explain like what this collection would have cost you to do on Ethereum and why that's different than Kadena?
Oh, probably $30 in it. Probably at least 30. Let's see, 30 times 300 is $9,000 probably. Cost me $1 on Kadena.
That's insane. So just picture that if you're a business, folks, anybody that's listening to this, for you to do what he just did on Ethereum, $30,000. You're a startup company. You're trying to put something
9,000.
Together. 9,000. Yeah, sorry, 9,000. $9,000 hit right off the hole to do something that could have been done for $1. It's the same thing. And even on Cardano, it might be 25 cents. But I try to do the analogy where if you're a hot dog vendor and you sell 1,000 hot dogs a day, and you're taking, Visa, PayPal, whatever. PayPal charges you a 3% fee right off. I think it's like 30 cents plus, and it might even be 60 under Biden now. This was back when I ran my business 4 years ago. So it's 30 cents per transaction and then 3% fee on top of that. So if you're a business and you're selling hot dogs, you sell 1,000 hot dogs in a day. So if we just do it, pull out my calculator, it should be super simple, but 1,000 times 25 cents is $250 a day that you're spending, right? Just to process, if you ran a hot dog stand on Cardano, $250 a day, that would literally be like less than $1 on Kadena. It might actually be 25 cents on Kadena. So
it's so ridiculous.
It's so ridiculous. Cheap. And then so if you do that for a year, you do that for a year, 365 days times 250. If your business is built on a blockchain like Cardano, your business is $91,000 more expensive. That is the overhead just to run the same business. So when you talk about game theory, right, just common sense will tell you anybody that has the opportunity to move their business off of the Cardano blockchain and provide the same services, not just the same services, you're going to do it in a more secure, a safer, probably a faster, in a more decentralized way. It's a no-brainer. It's just simple game theory. It's like Amazon, and it's my favorite analogy, right? Back in, I think it was 2017, Nike came out and did a press release and said, we are now going to take our products off of Amazon because we want to start to launch more actual physical in-store locations. And we're going to start to pull all of our products and stop allowing Amazon to sell Nike products on their platform. Under Armour, Adidas doubled down on Amazon. They actually started closing down stores and putting more products and spending more money marketing on Amazon. I think it was 2020 before Nike came out and held a press conference saying that they were now closing down retail stores to increase their inventory on Amazon. And that was done because when your competitors or competition are saving so much money in not having overhead, not having to pay employees, not having to pay insurance. I mean, Amazon is so efficient and you're able to get products now in the same day. So if you're not selling on Amazon and your customer is, and you're competing for the same customer base, you're probably alienating 80% of your clients now. So it's just simple game theory. If you're not selling on Amazon, you're going to go bankrupt because your competition is, or you're going to alienate an X amount of your customer base. Kadena is so powerful and so advanced that it's going to make businesses so much more efficient that if you are not building on Kadena, you are going to go bankrupt. And it's just a matter of time before, I think we see this mad flight to Kadena as long as they can deliver, on everything that they're claiming and they're supposed to be able to deliver on. It seems like a pretty big no-brainer. Am I looking at that wrong, or is there anything you'd want to add to that?
They've already delivered. They've delivered a fully scalable blockchain, infinitely scalable. They can expand the chains and then make it into an efficient Peterson graph so that the propagation on those chains is very efficient. They've already done that and proven that. They could probably, I think they say we can go to 100 chains right now if we wanted to. There just has to be the demand. And so it's not really a problem of supply of cheap space. So basically you're just selling space on blockchain. Blockchain is just kind of a database in the end, but Ethereum's full. Blockchain's full. Bitcoin's full. They're maxed out, and so those gas fees can only go up over time. But that's kind of the neat thing about Kadena is that at any given time they can just make more chains. And then what happens is that the finality time doesn't suffer as long as it's a single chain experience. It does suffer a little bit with the cross-chain stuff as it grows and grows, right? That's just the nature of the math behind this wonderful product that they made. But there's so much free space even on 20 chains right now. We're not going to fill that up for a long time. And so it's great. And that gas is always going to be real low and real cheap. And like you're saying, it's about efficiencies at scale, economies of scale, so as Bitcoin grows and then brings in more and more people from the traditional finance sector, and then people start realizing that decentralized technology is the future, they're going to be looking at technologies like Kadena, because as you scale and the amount of money starts flowing around, those transaction fees, as you said, get larger and larger, they're going to be looking for solutions. And they're not going to be looking for vaporware L1s that don't have mature smart contract languages, and they don't have mature consensus algorithms behind it. They're going to be looking at Kadena, and that's why we're very passionate about it. Mostly positive, sometimes negative, but very passionate no matter what, because they are doing the right thing. It's just a matter of time, to be honest. It needs more maturity, more of these institutions coming in, bringing this institution mentality, finance at scale. And now when you see Larry Fink buying billions and billions upon billions of dollars of Bitcoin, you start to realize that Kadena's future is a lot closer than you thought it might be. And for those naysayers who, and I see them all the time on Twitter, who say Kadena is terrible because of the price. Obviously price matters, but I don't think that they understand what's coming for Kadena because it's a blockchain that's preparing itself for an institutional world. Yeah, that would be my take on it.
It's going to be an absolute game changer. I'm so excited to watch when, it actually takes off running. I like it at these lower prices. I honestly do, because it's so, easy for me to go to somebody that I'm just meeting, or, I'm on LFA now and I have all these people coming to me, what should I buy? What should I buy? And it's just the same thing. It's right. It's like, I've tapped into an audience that's so much bigger than the crypto community that we once knew, right? Like, I was talking to people that already understand crypto, that know crypto. And now I'm talking to a whole new audience, and I'm literally able to be like, just buy this, right? You'll never have an opportunity in your life, I don't think, again, to really throw such a small amount of money at something. When it was under $1, when it was 40 cents, I was over here screaming at the top of my lungs, like, how much farther can we go down? Like, you might lose 50%, but like, it's hard to explain to people that don't know crypto. Like, when Kadena has a 75 or an $85 million market cap, I think is the lowest it got down to. If it goes to a $45 million market cap, for you to get back up to where you were, if it did go 50% off from there, it happens so fast. Like, people watched it, right? We went from 40 to like 60 to 80 to 100 or $1, then to $1.20, then all the way up to $1.80. It was reminding me back in the day when we first found it. It ran from $1.30 all the way up to $28, and I watched, thousands turn into 560,000, and then I watched that 560,000 go down to about, I don't even know what it was. I was afraid to look at it. Like, I just stopped looking at my balance. I was like, dude, I have $560,000 turned into, but I started with 1,000. So I turned 1,000 into 560,000 in about, 6 months. And I remember going shopping that first day at Under Armour, and I was like, walking around the store with $560,000 in my crypto wallet going, dude, I don't have to look at any price tag at anything in this store. It was such a surreal feeling, like, I finally did it, man. All that work paid off. We're going to the big leagues now. And then it went from 28 to 24 to 22.
Bankman,
Sam
SBF,
Bankman,
man.
The CIA, right? Anybody that thinks that Sam Bankman-Fried did that by himself, they're out of their mind. I mean, that you don't get to the position that he got to and the protection that he had, to where you're buying off politicians and lawyers and congressmen and women and senators and regulators, without the backing of the most powerful people in the world, all with the intention to control enough liquidity of Bitcoin to collapse it and destroy it once and for all. If they would have been able to push it down, I don't know if they would have pushed it down low enough, or if there was enough money from people like in the Bitcoin world to bail out Saylor if Bitcoin went down, because I think there was a point where he would have got potentially margin called, but it was like, it was low. I think it was, at one point it was like 11,000, and then it got down to like 8,000, and then he brought it back up to 11,000. But I think that's where they were trying to push price. Could you imagine $1 billion worth of Bitcoin getting liquidated when it's already at 10,000? I mean, it would have taken us to such an insane low that it's almost, that's what, that, in my personal opinion, that's what he was doing. And if he would have got the $8 billion in carbon credits that he was supposed to get from the Bahamas government, and he would have opened up those markets, he would have been able to sell off enough make-believe Bitcoin. He'd been cashing out carbon credits, taking that, buying Bitcoin, and then driving it back over, and then just arbitraging it down and just constantly, tanking the price of Bitcoin. So I don't even know where I was going on that rant, but
it's okay. I have a little different perspective on it.
Go ahead. Yeah,
FTX still owes me quite a lot of money, by the way, and I don't think I'll ever see that.
How did you wait? How in the hell did you have money stuck on FTX? Weren't you with us when we were shorting it, making all that money?
Well, I just got caught. I thought that there's no way that they would let that collapse. And then by the time, because at the time when we were withdrawing money, you needed to be a Bohemian. I think that's what you call a Bohemian person. you needed to be from the Bahamas to extract money. So they were like slow paying out Canadians. And so I got some out, but I still owed quite a bit of money by them because I just wasn't, I was doing something else at that time. But, it's just the fact that a lot of us got caught and then that scam. So what Bankman-Fried was doing was when you deposit Bitcoin, he would just sell it right away. And my perspective is that he wasn't a good trader. I mean, he's a Jane Street guy, but he wasn't a great trader. And he was trusting basically some fools to make trades with him on his Matta side. And they kept getting into a hole by making bad trades. They were getting liquidated. And then what he was doing was he was taking our Bitcoin in on the FTX side deposits and then selling it off. You're not supposed to be able to do that, but he was selling it off and then taking that money, funneling it back into Almeida. So my theory is that he's just a fool. And he made a lot of trading mistakes. And when you make trading mistakes like Three Arrows Capital did, you could be the smartest guys in the world. If you're not managing risk correctly, and this is from the sports bettor side of me, if you're not managing risk of your bankroll correctly, that starts to snowball rather quickly. And so what I think was less on the political side, more on the just being a fool and mismanaging funds. And then he got caught into the illegality, which is taking deposits bad. Never take the deposits of your depositors and then use them for your side interests on business. So you got to remember, he had a lot of shareholders like Tom Brady. He had a lot of face and a lot of ego. Like, that guy had an ego the size of, Mount Rushmore, right? So, or some mountain. So, that guy had a lot of investors who were counting on him and a lot of public face. So he would do anything to save that face over the fiduciary responsibility of holding his clients' deposits and not doing anything with that. That is a fundamental trust embedded in the American law that if you're a financial institution, you do not touch those deposits. And he was doing that. He was just, Ryan, you put in one Bitcoin, he sells it right away. That's why the price kept going down.
Right. But
go ahead. Yeah.
Let me ask you this part, right? Bitcoin's at the time was around 40 when everything started to cascade. And that initial push, right, is Sam Bankman-Fried shorting it and then moving big amounts of money to other exchanges and selling it off to drive that price down. So from the time that he opens his short, right, he moves crypto over, tanks price. They kept saying he was shorting the market. Price kept falling. So he tells us that he lost. How are you losing when you were betting on it short before the collapse, and then you were ordering Caroline? She was saying that if Bitcoin got above 20,000, it was to sell. Constantly sell Bitcoin every chance you got to drive price down. Where did they lose that if they were shorting the market and the market collapsed? I know that was the narrative that they were trying to push out, but I couldn't put that piece together.
I don't even think they were shorting, Ryan. I just think they're idiots, and they were making bets on altcoins and getting destroyed. Because let me tell you, even as a sophisticated trader, it is very, very difficult to beat the market in crypto. Only the very most sophisticated people, like Wintermute, using arbitrage strategies, can beat the market. Mm-hmm. The Three Arrows Capital destroyed. The Terra Luna guys destroyed. So this is not easy to beat the market. And if you're arrogant and you think that the market won't punish you for your arrogance and your attitude, you are going to get taught real fast. So, there's a famous meme in crypto, which is the main characters hit list, where the main characters of crypto, and there's Sailor is number one. And then you got X's and like Zhu Shu and like Bankman-Fried and Caroline, and like there's X's on everyone. It's like the Grim Reaper coming on each door in that famous meme, and you just see dead crypto characters. You think now it's Capo, El Capo to crypto. He's like the funniest fatality that's happening right now because he's short everything. But so I just think they're idiots, and they made a lot of mistakes thinking that they should be traders instead of fund managers. They should have managed people's money a lot better. At least Almeida should have been allowed to fail. And then you at least have the FTX side holding people's crypto honestly and providing a service for the crypto community. That damaged things incredibly. And that's why, Bitcoin should have never have gone below 20, in my opinion. But here we are.
Here we are. I think, it was great. I was able to buy a lot of Bitcoin in that range. I mean, you know, it made up for all the Bitcoin I bought at the much higher prices. So, but I did. I bought a Bitcoin at 20. I think the highest I bought one down at that lower level was like 23 or 24. It was on that first, went down and then started to go up, and I was like, okay, here we go. It was just a, you know, flash crash because of Bankman-Fried, and I bought one at 23 or 24, and then like the next day it was back down to 20, and I was like, gosh damn it, you better fucking stay down here. And then it went up and it came back down a little bit, and I just kept buying, and I was able to accumulate 3.5 Bitcoin. So
Ooh,
I mean, you know, I became a whole coiner on that first drop down when it was at like from 39 down to 29 or something like that again. And then from there, I was able to, you know, accumulate another 2.5. So I'm about as big of a Bitcoin maxi now as you can get. I've really realized that there's, you know, nothing's truly decentralized. It doesn't matter if it's Kadena or these other blockchains, you know, there's no true decentralization. Now you get to a point where it's really, you know, as decentralized as you can get, but that's still, if you talk about it, it's still not technically decentralized. I know we call everything decentralized, and I thought Kadena was going to be that, you know, that solution. But we talked last night, and you know, and the ledger that they have that's controlled by, you know, a key set that the team owns is, and it's, you're trusting the team, but you're not just trusting the team. You're trusting that Kadena is in New York City, and they live in New York, and we just saw what happened to Trump, right? So if they decide to speak out against, you know, anything that's going on in their city, all of a sudden you got the regulators knocking on your door, or maybe the regulators are in bed with somebody that you become a threat to, and now they're using lawfare against you, and they're forcing you to hand over things that should never have been in your possession in the first place. So, you know, I've just come to realize that, you know, Bitcoin needs to be your main bag. It doesn't matter what you're doing. 50% of your portfolio allocation has to go to Bitcoin, and then sure, take some risk. And you know, that doesn't change my stance about Kadena or my feelings about Kadena, because it's the most revolutionary technology in the history of the world. And things that are possible on Kadena are just not possible on other blockchains, or they're possible, but they're not efficient, or they don't make sense. So Kadena is really the only proof of work. It is the only proof of work scalable blockchain. And it's the only scalable blockchain, period, that can actually scale infinitely to support any number of transactions without ever jeopardizing the how the blockchain interacts with people, or how people interact with the blockchain, I should say. So, but let's talk a little bit about Bitcoin, man. I know you got me all excited. There's scaling solutions. At one point, I read a documentary, and this was about the Lightning Network, and maybe you can enlighten me a little bit. So those people that don't know, we're talking about Bitcoin being and pricing out every single person in the middle class. If you are below the uber rich, you cannot afford to use the Bitcoin blockchain. Period. You can't even really try to save into it. You can't DCA into it. You kind of can through a centralized exchange, but to do it right, not your keys, not your crypto, and actually get Bitcoin into a wallet you own, the only way to do that is the Lightning Network. And which blows my mind that Coinbase, the largest exchange, how the fuck are you not on the Lightning Network? Bybit, how the fuck am I paying $50 to withdraw a gosh damn Bitcoin? Now I get it. Before whatever the fuck happened just happened, and this upgrade and gas fees went from, you know, $7 or $8 to $50, that you were wanting to incentivize miners to process transactions and keep paying them, because there was a point there where a lot of people are capitulating. These mining farms are going bankrupt because they just weren't making enough to offset the cost of electricity. So those transactions really, really helped. Well, now transactions are super fucking high, and the miners are eating good right now. And we, the user, are getting fucked. So how is it possible that these other exchanges aren't using the Lightning Network? Why aren't they? And then I also heard, because the Lightning Network is like a DAG structure, it's like a nodes that are communicating. I watched a documentary that said at one point, they don't know what point it is, but when you have so many nodes up and running, or so many, I guess it would be nodes, nodes up and running, that the network gets so congested that they don't know what the breaking point, but there will be a breaking point there. Is that still something that might happen? Like the Lightning Network might just hit a point where it's like you can't run another Lightning node because there's just so many? Or is that infinitely scalable? What are your thoughts on that? Give us some intel.
I think that if Lightning was scalable, it would already be there. So I'm not a fan of Lightning or the L2 approach. I'm more a fan of the sidechain approach in Bitcoin. So I've talked a lot about this with some friends in a place on Telegram called the Whale Pool. So shout out, just a quick shout out to KDX Frog, Lane, and MW, and all those guys. I'm sure they'll love to hear that. But I talk a lot about with those guys, and we invest in a lot of coins together that deal with scalability of the Bitcoin L1, because I'm a Bitcoin maximalist like you as well.
Yep.
Most of my net worth is held in Bitcoin. I do have quite a lot in Kadena, and that's about it. I don't really touch anything else because I think proof of work is the way forward. But I don't like the L2 approach because it comes with a lot of problems. Those problems are kind of deeply embedded in how the L2 communicates with the L1, because in the end of the day, if you have some other token, and I don't even think Lightning has another token. I just think it's just a bunch of nodes that are trying to, I don't really understand it that well. My scaling knowledge is more on the sidechain approach, where you're using things like what's called colored coins, or you're using the inscription of data, the BRC20 protocol, where you're trying to inscribe data onto the Satoshis themselves. So I don't know if you knew this, but each Satoshi, which is, and if you're new and you don't know Bitcoin very well, each Bitcoin is actually divisible into, like a dollar is into pennies, into little things called Satoshis. And Satoshis are the smallest atomic immutable object that can be transferred over the Bitcoin L1. So those Satoshis actually have 80 bytes associated with, so 80 bytes of data associated with that. And those bytes of data, you can write data to each Satoshi, okay? And so I don't like Lightning because I particularly don't understand it. I don't think it can scale. If it already did, if it scaled, it would already be in use. So I think that's why Coinbase doesn't use it. But there are scaling solutions, and we've seen this kind of a rise, Ryan, where you have BRC20, where people are sort of inscribing data onto the Satoshis themselves. So that little space where you can write data onto it, what they're doing is they're writing their NFTs onto those individual Satoshis. And then the value of those Satoshis go up because it's related to these assets, these NFTs. So you've seen this with the Bitcoin NFT, the ordinals, right? You've seen this.
I've never seen them. No, I've been so out of the game. So this is all. Yeah.
You haven't seen that?
I've heard about them, but no. Yeah, tell me.
Yeah, so an NFT is just an image, right? An image is just pixel data, which is RGB data, which is just 3 integers. So one integer for red, one for green, one for blue. And that's just byte data, right? So and you can take that data and you can write that to individual Satoshis, because each Satoshi comes with a little block of space, 80 bytes of data. That's not very big at all, right? Just very tiny, but you can write data to that. And then those Satoshis forever have that immutable data attached to it. And that immutable data is exactly that NFT data, right? And so people were getting really mad because people were trying to inscribe that data onto the Satoshi itself. And what that does is it clogs up the Bitcoin network, right? But the miners are really happy because they're getting fees, right? Because you're clogging data. You're clogging data up, and you're writing to these Satoshis. They're making money. Everyone is making a lot of money. So they're really, really happy about that. And so this is called the BRC20 protocol, as I understand it, where you're trying to relate these individual Satoshis to the asset. And then because of the nature of the UTXO transaction, you can take a part of that Bitcoin, split it, and then that split off piece represents that NFT asset. And then when you take those Satoshis and put it into another Bitcoin wallet, you're exactly transferring that asset, that NFT itself, into the wallet. So you can actually inscribe NFTs onto the Bitcoin network, which is really neat. So there's these nice companies that have come up called like Ordi. Ordi is a famous coin in Bitcoin right now that people are investing in because it tries to scale this process, make it a little bit more efficient. It's just a little bit better of a mapping. But I'm particularly interested right now in a coin that nobody's talking about. It's called MVC Space, Microvision Chain. And they run something called the Space Token. And what they do is they run my very favorite scaling solution. It's called an ARC20 protocol. But what that really is, in the end of the day, is something called a colored coin, okay? So what a colored coin is like, remember I told you each Satoshi can have a little bit of data written to it, right? So all Satoshis are is metadata, right? Which describes what the coin or what that little immutable object is. And then they kind of mashed together to create this thing called a Bitcoin. So each individual Satoshi can take a little bit of data. And what you can do is you can do something called color that Satoshi. So remember, a color is just an RGB, so integer, integer, integer. So that's just some data, and you can fit that onto a Satoshi, and that's called a color, because there's many colors, right? So it could be 1, 118, 113. That's like a variation of pink or something like that, RGB. And so when you write that, you color that coin, and that metadata now is attached to that Satoshi. Now imagine you have another L1 on the side. You call that a sidechain. That's what MVC space is. And each one of those tokens has some metadata that relates to that Bitcoin itself. So what happens is you attach your token, so the space token on the L1, to that Satoshi through that metadata. You relate it together. And what happens is when you transact with the Satoshi, you put it in somebody's wallet, you're literally transferring the other token on the L1 into that wallet. Okay? It directly maps to Bitcoin. But the cool thing about MVC space is they have pruning technology, which makes the UTXO process of building a Merkle root and confirming it. So on Bitcoin, it's very long because you have to go through the whole history of Bitcoin all the way to the bottom and traverse the whole history of where that token went, and then you confirm it, and that's why the POW takes so long. But what MVC space does is they make that Merkle root. So you take the hash, and then you have a Merkle root that comes out of that, and you embed data into it with something called a meta transaction ID. That meta transaction ID actually takes away the pieces of the tree, which you have to go through to basically confirm the history of all the transactions on the Bitcoin network. It makes that very efficient by pruning away the stuff that doesn't matter. It's just the part that you need. And what that does is it makes transactions extremely fast on space. Now, why does that matter? Because you can bridge your Satoshis to space. So they're putting out a bridge at the end of the month. And what you can do is you can bridge your Satoshis to space, and then you can transact much, much, much faster on the space L1. And then when you need the Bitcoin L1, because it's a store of value, right? So the utility is on space, but the store of value is on the Bitcoin L1. That's where you want to store things. So when you're done transacting, you can send the Satoshis back to Bitcoin because they're related by the little metadata, right? So, and there's 21 million space, there's 21 million Bitcoin, so it's one-to-one mapping. So basically you're taking your Satoshis, doing 100 times the volume, 100 times quicker, and then you send it back for storage on the L1 when you're done, okay? And that's how you scale Bitcoin. It's amazing. And what this is like, Ryan, is that it's like restoring gold-backed currency, okay? That's really what's going on here. You're using gold, which is store of value, and you're using Bitcoin, which is a store of value. And then by writing some metadata, you can relate it to the dollar. So as gold is related to the dollar, Bitcoin is related to the MVC space token. So it's restoring gold-backed currency for a digital age. That's what MVC space is doing. So these wicked protocols called colored coins are coming out. It's called an ARC-20 protocol. You should look into it. I recommend anyone to look into it. And these protocols like Space are coming up out of nowhere and building this new financial engine and restoring sound money, because we know the American dollar is not sound. So I kind of look at these new scaling technologies like Space as the new dollar, or the new dollar, which is backed by sound money, hyper sound money, actually, because Bitcoin is the strongest, most fundamental currency ever created in the history of man and will never be replaced. It is the store of value of the future. So when you build these technologies which can back itself by that store of value, but still transact at a much higher rate because they make some improvements, which Bitcoin is kind of stuck. It can't make those improvements. But if you can just kind of bridge it over and then make sure that those Satoshis are related to your coin, what you can do is you can do transactions many, many times faster. And it's like you're really transacting Bitcoin in the same wallet. And then you just send that baby back when you need to trust the store of value, right? When you need that security of the biggest network in the world. So these are new scaling solutions. This is one called Space that we're highly, for financial transparency, I'm highly invested in that. And we think these types of protocols are the future.
And how are you like, is there an exchange, or how are you acquiring these space tokens? Is there a marketplace now for these things?
Yeah, there's three ways to do that. You can go to MEXC and you can go to Gate.io. Now I know
you
for
can get them
Americans
on centralized.
Yeah, you can get them on centralized now. So they're growing up from just a swap token to an actual token. But you can also use RocketX as an American. So RocketX is a decentralized swap, which you can use with good fees. And you can get space token off that as well. Or any other one like Ordi or
and what type of wallet do you have to have?
like that.
What type of wallet?
They have their own wallet called Metalet. So it's just like MetaMask. It's called Metalet, and you can grab it. And we really think that one's going to fly. But there's other great ones like Stacks and Ordi as well. And there's lots of different solutions that are really, I guess, focused on scaling Bitcoin, because they know that Bitcoin is the primary apex asset that everyone wants to own. Like Saylor says, everything goes to zero against Bitcoin. But what Saylor is not realizing is that scaling solutions that help Bitcoin grow can live in symbiosis with Bitcoin. So we really, our top one is Space by a long margin, but then there's other ones as well. Stacks or Ordi you can look at, and they do BRC20 stuff. I think Stacks has a kind of a neat technique where they're embedding Bitcoin mining in their own L1. So, like you can mine tokens on the Stacks protocol and then get like recompensed in Bitcoin as well. I'm still kind of learning a little bit about Stacks, but they're pretty big. They're a $4.4 billion firm, and their token is worth quite a lot of money. So I think that as an investor, you really want to look at these solutions, right? Because once Bitcoin's done growing, that money's going to flow. But where's it going to flow? It's not going to flow to some shitcoin. It's going to flow to Bitcoin scaling. That's the future.
And what's crazy too is Stacks is the only cryptocurrency that cannot be targeted by the SEC. They've already settled their shit. They've done it. If I'm not mistaken, I believe it even says it on CoinMarketCap, because we've looked into that before. And they were the only one that went through the battles with the SEC early on and settled, and somehow they became, they got their grace of the SEC. So you're not have to worry about, if you're investing in Stacks, that you're going to be holding something that's going to be deplatformed or anything of the sort, which is really, really interesting. So are these side chains, like Flux is on a side chain when they spin up like an Avalanche side chain. Your crypto is safe because it's always one for one, right? Like the rewards that they're giving you in the Flux Avalanche coin to whatever to store in Zelcore is being held by them at a 1-for-1 rate. So if anything were to get compromised, your original Avalanche is still safe and secure there. On Bitcoin, how are these side chains getting spun up? Is this something like where anybody can go up and spin up their own side chain, or is this, and those side chains are still going to be eventually sending at least one transaction, right? So they take all of the transactions in a 10-minute period, they compress them into one, and they send that one transaction back to the Bitcoin blockchain to settle every 10 minutes, or how is that part working?
Yeah, we think that that's not a good solution, because you're trying to roll up, you're trying to compress all your transactions and then relate it to the Bitcoin blockchain by making one transaction on the Bitcoin L1. And then you can kind of unroll that and just kind of prove that all those transactions took place on your L2. But it's much, much more efficient to do what I was telling you about, which is to color your coin, because you can just bridge the Bitcoin over to your L1 and then do a bunch of transacting on the side chain.
Oh, you don't even have to send it back. I see, because it's a 1-for-1 swap when you go back. So whatever you do and accumulate, you just need to cash transfer it for security back to where it started.
Because the asset's written into the Satoshi itself. So once you bridge it over, and by the way, MVC Space is the only 1-for-1 protocol. That is, there's 21 million Space, 21 million Bitcoin. So it's directly related. Each Space is related to each Bitcoin. So each Satoshi is, I don't know what they call the Satoshi in Space. Maybe it's a Space Satoshi, but they're all related to each other. Okay, 1-to-1. Where Stacks is like many, many, many to one. And there's nothing like it out there. But these are the types of new innovations that are coming out. And it's tough because they're just new and they're just getting their legs in the industry. But I think what you're going to see is Bitcoin scaling explode exponentially once the altcoin run comes in, because Bitcoin's going to cap out. It's going to get pretty high. I think it's going to go up at least to 250K plus per coin, at least. Because I think it's going to shock people how much money is going to flow into Bitcoin, like completely shocking. People will not understand. And then that's going to really clog up that network. And so I think where the alpha is, Ryan, is to stay in Bitcoin, because these boomers, and I mean boomers, I'm a boomer, okay? Like you can see, I mean boomer in an affectionate way. They're coming in, they're buying Bitcoin. That money's not going to Ethereum that is sitting in these ETFs. That's not going to go to ETH, and it's not going to go to Solana. It's going to stay in Bitcoin. So Bitcoin scaling solutions are what you really want to look at right now. So you really want to look at the teams and what they're trying to do, how they're trying to make things efficient. And when you have these nice bridging protocols, which can just write some data to the little Satoshis, and then you can do business on this side chain and get scale out of it. And then anytime you can just swap it back to the Bitcoin L1, because you really want the security of the biggest proof of work network in the world to secure your asset, because you might not trust the side chain as much, right? So you get that trust out of it, but you also get that transactionality out of it. And we think that's, in my little group, we think that's the future of cryptocurrency, is to stick with Bitcoin and stick with Bitcoin scaling solutions, and Kadena as well. Kadena is a very special place for me because, like you were saying, it is a solution which infinitely scales, but it infinitely scales with smart contracts. That's the one piece you were missing. It has smart contracts embedded in it, and that smart contract language is secure. Where Caspa, once they introduce a smart contract language to their coin, it's going to blow up their whole proof of work system, because now you have to pay for general computation, which is something that Kadena has uniquely figured out. So we believe in these two fundamental blockchains and anything that has to do around scaling them. But Kadena already scales, so it doesn't need to do that. And that's our investment thesis going forward. Focus on those aspects of the crypto market and ignore things like Ethereum, which is, I know people love Ethereum, but I just don't see a future for it.
People
really
love
don't.
it. I never have. I did back when I was mining it when it was $2.64, and it was the only smart contract blockchain. It was revolutionary, But
yeah,
now it's just like you said. It's in the going to proof of stake, which I just thought was such a woke move. It's skin in the game. It's that energy. You have to be putting skin in the game, right? You can't secure, like Michael Saylor says, you can't secure a $1 billion transaction with a validator that has, $100,000 or $200,000. It just doesn't make sense. You're not incentivizing, malicious actors not to be malicious or anything else, or your blockchain just stops running, right? Like proof of work blockchains they just keep running. I don't know if Kadena's ever gone down. I thought I saw on the website 100% uptime, that their blockchain just never stops. And I don't know if that's true, but
it's true. They actually just recovered from an outage with so what happens is when you send your transactions to Chainweb, they have a series of nodes, right? And they have main nodes, like the most important ones. And one of them went down the other day. So some transactions were not getting through in a timely manner. But what happened was, while that was happening, the team fixed it, and the other nodes stepped up and took care of the transactionality. So it was still recording the transactions. Transactions still went through over time. So even when a node went down, unlike Solana, which is down like every 3 weeks or something like that, Kadena actually had an extremely bad situation happen where a node went down and it's recovered, and it's just meant to operate this way. So good on the Kadena Chainweb and Pact team, because they survived a serious situation. And maybe I shouldn't say that, but for me, I'm honest. I like to
say it, bro.
To say what happened, and so that happened and they survived. So for me, that is exactly what you want to see from a sports betting perspective, because if you have thousands of customers betting and then Solana goes down, they're going to go somewhere else. So yeah, so that's Kadena. It survived.
Yeah, I know that. I mean, that's happened quite a few times to them where they've been being attacked. I know one time they talked about with on Flux and how they had all these backup nodes, and they were like people that watch our channel that are into politics, and they're getting new to crypto. we watch it happen with Rumble, right? It's the same type of DDoS attacks, these DOS attacks, where you have these, I guess, what are they called, servers in the real world, where your website and everything's housed on these servers, right? And you're constantly pulling information and data from those servers and sending data to those servers. And if you can basically clog up that highway, right, by constantly sending or requesting information or trying to pull more data or send more data, you can clog up the network. And we see Rumble constantly getting these, they call them these DOS attacks. And that was the same thing that was happening in Kadena, but because they had all their nodes running on Flux, it was like the attacker would find one node and he would take it out, and then it would spin up another one on Flux, because Flux is wrote in Solidity and it's got that recursive coding language. So if a node gets taken down, another one's really spun up in real time, almost instantaneously. So the hacker was taking one out and Flux was spinning one back up, and he was taking out another one, he was spinning one back up. And that gave them the 4-hour window that they needed, all hands on deck, found the issue, updated the code, fixed it, and then back up and running, and everything just kind of, it might take a couple hours for all the transactions to finally get processed that were built up. But, if your chain doesn't stop, that's exactly what you want in a blockchain.
It's exactly what you want. No downtime, and you shouldn't actually notice if an attack is happening. It should be that robust. So I think that Kadena is one of the most, I don't know too much about Flux, although I really like the software. I really like what they're doing there. It's obviously a great company, and Dan is a great guy. But for me, I've seen Kadena go through just really awful outages and simply survive. So that robustness is what gives developers the confidence to move forward. Every time I look at Solana, it's just a disaster, and then somehow it just maintains its value. And I just don't understand it. So like I said to you before, we're looking at an institutional future. Maybe that's not the right institution-based future. And we're looking at massive transactionality coming in the next 4 years. So that by the next cycle, every company, I think, is going to be somewhat involved with blockchain. And so we're talking 10, 20, 30x times transaction rate. It's coming. And you want to make sure that you survive these types of attacks, because we're going to be living in a decentralized world. So Kadena is ripe and prompt for that, in my opinion. They've proven that they can handle this type of outage. So that's good confidence for anyone listening if you're interested in Kadena.
I think it's going to be interesting too. And we see some project, like something that can't be built on Ethereum or one of these other blockchains, just because it can't support that type of transaction volume. And then you see one project do it on Kadena. I think it's going to open the floodgates for other products to go, wow, things that we maybe just never thought would go into the world of blockchain because of how expensive it would be, or how many transactions you need to deliver in a short period of time, where Kadena is giving these companies the ability to do this, and they're able to do it right now if they wanted. What would you say is going to be the biggest hurdles for Kadena to get over, to get us to a point where, like you said, it's like you got to have the community, you got to have the CEOs and these people going to all these conferences, getting on every network, doing all this stuff. Is the Kadena team at a point where they're so bogged down that Stuart couldn't even get on a Telegram until today or this week? And that do you think that we're going to see that kind of mindset and mentality that we saw from Solana and Anatoly Yakovenko, where they're going out on all these networks and they're doing these interviews and they're explaining their tech, and they're hosting events and throwing parties with the community and doing all these things? Or they almost need to make like somebody else the face of Kadena and just let them do that part of it? Or what's your thoughts on that?
I think that having been a CEO in my past, I know I probably don't look like the typical CEO, but having been one and run a company, I ran a company up to about 30 people. And when you start out, you think you know what's going on, and then you go through this sort of down period where you're learning about your business and you're learning what it takes to be a leader. You're learning what it takes to manage dozens of people. It's very, very difficult. I had the benefit of the doubt of working at Amazon. I was on the machine learning team there, and so I got to see Jeff Bezos' work and met him several times. I was the book selling metrics guy at Amazon, and when you saw an operation like that, you learn a lot. So what I think is happening is the CEO of Kadena is starting to clue in, and you always go through that down period where you start off. He had $28, and I'm just speculating, by the way, just postulating, but this is what I think. And then you suffer a little bit because you're learning what it takes to deal with people coming in, coming out. Things change, and you're trying to change your mindset from a computer programmer, which is what the guy who runs Kadena was. He's a great computer programmer working at JP Morgan, and he made a masterpiece in Pact. And maybe you're really just focusing on software a little too much. But then you start to learn that community matters. You start to learn that managing people is your full-time job. And then you start to realize that keeping the lights on and making sure that you're doing high-level things like bringing in new projects, bringing in effective C-level employees, and maybe just spending a lot of time with the community and just selling your vision is more important than overseeing every last aspect of the code base, which I think is what the Kadena CEO was doing for a little while. That's Stuart Popejoy, by the way. I don't know him, but I don't know him. I've never met him. I'm just postulating on what's going on. And now what I think you've seen is that he's hired the right people. He's hired Mike Heron. I don't know this guy, Randy, very well, but he seems to be coming around and doing things. We see the Pact team absolutely crushing it. So Emily Pillmore, who you know very well, I don't know her, but you know her very well. I see what she's doing, and she's making promises and keeping to them now. And that was missing in Kadena. So I think what you see is the CEO is now on the uprise. So now he's on the uprise and starting to learn that maybe coding isn't the job. He's learning now, and now he's taking part in the community. He's hiring the right people to surround himself with. And now the next step is to represent yourself in the broader community. First, you have to heal your own community, and then you have to represent yourself in the broader community and enjoy life. Be happy, enjoy life, know that you've built something special, and have a vision that can inspire people and that you're looking forward to sharing with the broader community and pushing something out there that and you feel passionately is going to change the way that things work. And I think that's what this layer H is all about. Okay, the human layer. It does sound kind of silly when you think about it, but in reality, they're trying to help humanity realize a decentralized future where necessarily not everything to do with a software company is held within the hands of one person, where anybody can come on and build a large company on the Kadena base network. And that's what this human layer marketing is all about. And so you see this maturity start to emerge, Ryan. And I really, really think that we do not need a new face to lead Kadena. The right face is leading Kadena. He just needs to push himself forward and to realize what being a CEO is. And you're seeing that right now. And that's just for me, because I ran a small company. I haven't run a company as big as Kadena, so I might be talking out of my ass, but that's what I think what's really going to go on. I think in the next 6 months, you're going to see this guy start to perform at a very high level. You can already see the ingredients. You can see the stew boiling. He's stirring the pot. Things are starting to happen. Just give it 6 months, and I think you're going to see a world of change come out of this guy, Stuart Popejoy. Because not only does he understand the tech, and he hangs out around with the literal inventors of the blockchain, he has that type of cred. Once he learns the community side of things, well, you're going to see something real special happen here.
I think so, man. I couldn't be more excited for it. I'm how much I'm holding ginormous bags of Kadena, and I just kept buying it 40 cents. I couldn't help myself. I just, every time I got more money, it was just thousands and thousands. I put every penny that I had after I accumulated those 3.5 Bitcoin pretty early on. I was like, okay, I'm set here, this giant bag of Bitcoin. And then I just started getting more and more, and I got bots up and running, and they're really the holy grail, man. That's where I've been able to accumulate and really add to my bags is these bots, man. I can't get over, and I can't talk about them enough, because when you're holding assets that you're able to, you're willing to just keep throwing money at, worst case, it turns you into a DCA bot. Best case, this thing, pays for itself every 4 months. So if you give it 10,000 in 4 months, you're making 10,000, it's insane. Mm-hmm. It's almost like you have your own money printer now. And then you're able to take that profits and put it into other bots. And now I got Bitcoin bots that are trading and taking profits in Bitcoin. And then I got USDT bots that are taking profit in USDT. So sometimes, like yesterday, my Bitcoin bots ran out, but my USD bots were running, right? And they had maybe like $4,000. So then I was able to buy $4 more worth of Bitcoin, give to my Bitcoin bots. Now they're running, right? And then my other bots that is a Bitcoin USDT bot, that one, if price keeps coming down, it needs more Bitcoin, right? So it's like these bots are kind of feeding each other, and one's running, so if one runs out, the other's making what the other one needs. And if the other one runs out, it's making what the other one needs. So it's like, it's got this really cool kind of setup, and they're just badass, man. I don't know if you're not running bots, man, you really should take a gander at these things, because if you're holding your crypto, why? It just seems to me like you got to put it to work. I got, a giant bag that just doesn't touch exchanges, because that's the downside to these things is, you're keeping your crypto on a centralized exchange. But
we have predictive technology for Bitcoin. So that's what I do. I run machine learning technology on Bitcoin. So I look at futures and options data, positional data. I take positions in Bitcoin. Thankfully, it's just been up only, so I haven't had to really do anything. But in Kadena right now, we're really hammering longs on dips. So I've made a 4x in the last 6 days, because right now what's happening in Kadena, I hope a little TA, and then maybe we can end it on some TA.
Yeah.
And technical analysis for those who don't know. So on Kadena right now, I was complaining so much about the market maker. I would go on their Telegram and go, when market maker, and then Mike Haran would get very angry. Well, not very, I shouldn't say that. He's not angry. He's a thick-skinned dude, but he would get kind of impatient because I'm just complaining, because what they did was they got a real market maker involved last December. That's when you saw the pump to $1.50 on Christmas. And now what you're seeing is the market maker is establishing ranges. Right now, there's a range between $1.6 and $2, which we think is going to sit there for a while as the price consolidates. So right now, if you're buying with your bots at a grid of 1.6 or below, and I don't like shorting, but if you just sell your spot at $2, and then you could probably don't sell too much spot, by the way, because you don't want to sell all your Kadena, of course, right? But you can make a little money selling your spot and then relonging that. So I hold 90% of my Kadena in spot, and then I got 10% for trading. That 10% has already made me another 30% of my spot portfolio, because I've just been hammering this obvious rise to $2 that happened. I sold some of my spot back, and then I keep longing at 2-3x down at 1.6 and below. It's a good strategy, because you can see the market maker is exiting weak hands right now in Kadena. That's what they're doing. They're buying a lot of the miners' capitulation who are angry with Kadena, a lot of baggies who are just really impatient and want to get out at $2, right? I'm so happy I can go and invest in other things. Go ahead. We're just going to keep longing Kadena. So I'm taking out big longs in between. Like today, we took one out at 1.4, which was really nice. We got it right at the bottom. And, we're just hammering that, because that grid is going to be held stable for a while. It's going to consolidate. What you're going to see the market maker do is they're going to move that box, that grid up, up, until it reaches sort of a plateau. And then you're just going to sit on your spot and wait until Bitcoin's done rising. So it's going to go ballistic in the next 6 months. And when that's done, all that money is going to flood into alts, and that's when Kadena rises. So right now is your time to play this market. Just take 10% of your spot, and you can play this market. You can always come on KDA Bet Discord, ask us. We'll tell you our TA and what we're doing. And maybe it's not what you like, but we'll share. And try to make as much Kadena as you can, because once it goes, that's it. It's not going to come back down for maybe 4 years or something like that. I don't think so. I think we're really on the cusp of something special here with this coin. And a lot of people in the community feel it. There's some naysayers, but a lot of people in the community feel that. So right now is your time to make more of this token while you can, or buy more, because it's like $1.60. It's not going to stay there for long.
I couldn't agree more, man. It's
my Jim Cramer moment.
No, that's really good, man. I dig that. I'm going to have to start taking advice from you. And next time you could come on, and you guys think before it's going to go up or whatever, and you want to come on and do some live TA on it, I'd love to have you on. I'd love to learn more about what you guys are doing and how you guys are strategizing with it, because I can't get enough KDA, I can't get enough Bitcoin too. So I'm gonna keep, let me know next time you guys. So what do you think the market's going to happen right now with Bitcoin? Are we at a point where, people, it seems like, the real players in the game that understand how these markets move and understand how dumb money works, right? You had the people that were sitting at when Bitcoin went from 25 to 30, right? That final push when it broke above 25 for the first time and it ran up to 30 something and then kind of came back down. And everybody's like, nope, fake out. It's coming back down, and they didn't buy, right? They're waiting for it to come down to 10,000. They didn't buy at 15. They didn't buy when it went to 20. They didn't buy at 25. Now they're at a position where they're like, okay, I'm never going to see 15 again. But it's almost like they always do this. They push it up, and then you're like, shit, I'm going to buy at, when did it run from 40 to 50 or whatever? And then people are like, oh, it's coming down. And it did, and it came all the way back down to 39. That was our first, I guess, Bitcoin 20% pullback standard for Bitcoin cycles. Now it's running on that next leg up. And I think a lot of people thought top was, like 57 or 58. And then, there's a bunch of big players that have been shorting it and scaling into their shorts like I used to. And then it pushed up again, right? And it almost seems like it starts to pull back. People started to short it, and they start adding to their short positions. And the big players really know that if they push it up, liquidation. All of a sudden now there are these forced buybacks that are driving it up even higher, right? And RSI, every indicator right now is probably telling you to short Bitcoin outside of your dumb money brain, right? And it just keeps these forced liquidations. So are they driving the market up for one big drop right now? Do you think we're going to get the 2016, 2020, even 2012 Bitcoin having black swan event, traditional markets crash, liquidity crisis, whatever it is, Bitcoin free falls, and it's only there for like 3 or 4 days, and all the dumb money's got their money stuck up at top, so the whales eat prices right back up to where it was in a few months? Or do you think we're only going up from here? What do you think the bottom is from here, the lowest price that we're going to see Bitcoin?
Up only, man. We're not going to see any pullback. You got to understand, the ETFs opened up the floodgates to $40 trillion of money. The American dollar is dying, and I don't mean to say that to.
You should say that.
Our fellow Americans. I'm a Canadian, you know how we are, but the American dollar, it was the de facto monopoly for 100 years, and now we're seeing that completely dissolve and be torn apart. And we're not political at Katie Betton. We don't talk politics in general. We're not Americans, so we don't know, and it's not our place to talk about anything like that. Hold on.
Let me say this. When Biden took office, the US dollar made up for 80% of global trade around the world. Not even 4 years later, it is now down to 20%. So you might not be political, but this man has gutted the US dollar and its global reserve currency more in one term than every single president before him combined. So might
think
not be
of it
political,
from a world perspective, right? And so from a world perspective, finance is fractionalizing into a multipolar financial world, right? So you have China, you have Africa, you have Europe, you got South America, North America. It's not just a unipolar currency anymore. You see people are paying for oil in the yuan now, and this is happening. People in Europe have to buy gas in the ruble. And you might have political aspirations. You might not think the world of Russia or something like that. I don't know. All I know is that this is the reality of finance. And so what you're going to see is this balkanization of worldwide capital, where the SWIFT system that runs, most of finance in the world, where you're forced to buy US dollars to do, most large scale global transactions, that's all going to fall apart. And so the vultures are circling right now over the dollar. And I think smart people are starting to realize that there's no real store of value in the world, because even with the dollar being so weak, Ryan, the American dollar, by the way, not the other dollars, even with the dollar being so weak, it's still the strongest currency by like 100 light years compared to the yuan, compared to the yen, compared to the euro. These are all completely weak currencies built on shifting sand. So what people are going to, I think, imagine is a flight to security. What is the most secure asset in the history of the world? Bitcoin. And I think Saylor is 100% right. So the Bitcoin standard, as championed by Bukele, who is a hero of mine, I think is the right way to go. I think El Salvador is going to be the center of world finance one day. And I know how crazy that sounds, but if you think about it, these people are so far ahead, because these types of collapses in history happen so fast, Ryan. The devaluation of the dollar is accelerating exponentially. It's not a linear curve. Sorry, I don't know if I don't know.
Yeah, you're getting it right. Let me give you a full screen. There you go.
it's exponential decrease in value. It's exponential. And so that exponentiation is happening in real time right now. And what you're going to see, so inflation usually happens in three curves. It's a very famous, the Volcker curve, it's called. So we've been through one extreme inflation increase, and now it's coming down again. And Biden, you know, I don't know anything about Biden or anything, but he says that inflation is going to stay down forever. Oh, no.
Fuck no.
No,
I'm with you on that,
the next pump is going to be 3-4 times worse, and then there's going to be one more after that. And that's when things are just going to break and bust because the American public won't be able to take it anymore. And so what you're seeing Vanguard and BlackRock do is they're making a flight to sound money. And what I think America is going to do is they're going to pull the old trick where they control Bitcoin. They really do. They're going to control Bitcoin, all these ETFs. And what's going to happen is they're just going to translate the dollar to the Bitcoin standard, and America will become, yet again, a unipolar world power with several principalities like El Salvador and China, for one, who do own a bit of Bitcoin. Whoever has Bitcoin is going to be the dominating world power. Saylor might even have $1 trillion company one day, if you can believe it or not. It's coming. And there's no way that that can stop. And anyone who denies that is maybe a little bit insane.
Dude, man, you get me so gassed up over here. Guys, if you guys are enjoying this content, please consider smashing that like button. I know it's a little bit harder over here on Rumble, but if you just swing down there, hit that little gray thumbs up until it turns green, it'll really push this content out to a lot more people. And this is great, man. I'm so excited to be back into the crypto space. And this is how you really learn about those gems, you know. Last bull run, I came back in well after the Bitcoin halving. The Bitcoin halving was in April. And I think I started putting out crypto content again in like November, or maybe it might even been December. So I was like a year past the halving. And I just remember looking back at these times going, holy cow, you know, Cardano, 1.5 pennies, you know, and all these coins were so cheap. And it's hard to tell now, like, are we at that? Was that 40 cents the absolute low for alts? Or, you know, and what's crazy about these ETFs, and I don't think a lot of people realize, is right before they got approved, I think it was the week before, they changed the laws and regulations so that these ETF owners don't have to buy Bitcoin. That's the part that scares me about this, is we're not doing any proof of reserves for people like BlackRock. We're not doing any proof of reserves yet. That was the huge industry standard, like where, you know, you're not going to have Bitcoin unless it's if it's a reserve, you're an exchange, or you're hodling any amount of Bitcoin, you need to, you know, be showing reserves, proof of reserves. I haven't heard anything about proof of reserves for Bitcoin yet. So what's stopping these people, right? When you cash out your Bitcoin ETF, you don't get Bitcoin, right? You don't get Bitcoin's 40,000. You have 40,000 in your ETF. You don't get Bitcoin. You get dollars, right? Mm-hmm. So how do we know? What makes you think that these BlackRock players aren't doing, like, everybody's starting to flee the dollar, but do you think that there's just guaranteed that there's no pullback? What did you say that you thought the low was going to be for Bitcoin? Is it already in, or where do you see Bitcoin? Like, if you didn't own any Bitcoin right now, you're watching this show for the first time, do you wait, or what do you think is going to happen right now?
No, I'm constantly buying. Constantly, I hold 90% spot. I take 10% to trade. I've bought any dip since 32K. There's a friend of mine, Jeremiah and Kadena, who I talk trading with all the time. He runs a great group of traders who I'm commonly involved with.
I'd love to interview him.
Oh, he's a great guy. I don't know if he'd come on camera, but he's a miner. And, you know, I just remember distinctly, there's this guy, you know, shout out to Naxter. I know you don't know these guys, but, you know, he was always shorting Bitcoin and just so convinced that the economy, the fiat economy, would affect Bitcoin and drop it back down to, you know, 21K, 22K or something. And then once I saw it hit 30 and start to break 32, I knew that it was up only from there. And a lot of people, like, you know, Byzantine General, who I talk a lot with, you know, I don't know him personally or anything, but hang out on his chats. And this guy has been going hard since 15K. They said the bull run started at 15K, and I tend to agree with that. I don't think it's going down anytime soon at all. And that's because the floodgate to trillions of dollars of currency are coming are coming in now through the ETFs. This is the American economy, which is looking for a flight to safety. American economy is trillions of dollars per year. So what you're going to see is these boomers who are suffering, losing 7-8% a year, like Saylor says. Where are they going to put their money to at least survive this inflationary rise that's coming? Like I said, the Volcker curve is 3 curves. There's 2 more impulses of inflation coming. That's going to cause so much fear. It's going to be like a depression almost. It is probably going to be a depression. So where do you put your money? You put it in Bitcoin because it's sound. It's like gold. It is digital gold. And so it has to happen. And I don't think you're going to see any slowdown or a dump anytime soon. The only thing that I think could stop it is a massive fraud like SBF, but that's being stopped because Gensler is working with these ETFs to submit regulation. At least it'll be partially regulated, Ryan. So at least we're not going to see any more big SBF type scams. That could destroy things when people lack the confidence in the currency backing all of crypto, which is Bitcoin. So you also need to basically not have Gensler suing everyone, which I think he's done with that. I think it's pretty much done. Maybe he could still do that and go after some, but he's not going to go after Bitcoin. Bitcoin is now regulated, in my opinion. And so as long as that happens, the flight to safety is still $4 trillion short. What are we at, 1.3?
Yeah, something like that. Yeah, Gensler's on it. In my personal opinion, he's on his way out the door. He's the SEC will be dismantled. The second that Trump gets back into office, done.
Please.
Done with Gensler. That man, I didn't know this back then. That man facilitated the payments for the Steele dossier. He was Clinton's campaign finance manager and funded the $1 million that they were trying to bribe somebody, one of their assets, to lie and frame President Trump. And then he opened a case against a SPAC case against Trump's social media platform, Truth. And that's it. If you guys missed the intro to the show today, go back and watch it. It's all about basically, I mean, my intro literally says F Gary Gensler at the end of it. Like that's part of the show waiting room. You know, I despise that rat little bastard and what he's done to crypto. And they do it, the exact same thing to crypto is exactly how they killed nuclear power, right?
You don't have to have a Katie, I bet, king of Gensler crying. That's one of our kings made a Gensler crying king. He's down at the bottom.
Oh, that's epic. Oh, that's so good. That is so good, man. I'm jealous. I want that king. That's badass.
He's horrible, man. He's a horrible dude, and he should be ashamed of himself for hurting a lot of people and their aspirations. You know, people don't want to hold dollars. People don't want to hold a depreciating asset, which is taxed at 50%. They want to hold a appreciating asset, which allows them to raise families and to have a good life and a hope for the American dream. So I think Bitcoin is a personification of the American dream, which I greatly admire as a Canadian. We don't have that type of spirit up here. We're a little bit different, but we do admire you guys down there, and we hope that Gensler can, go bye-bye, and we get somebody in power who has a little bit more respect for people's individual aspirations and their freedoms. And that's what Bitcoin is. It's financial freedom personified as an immutable token in an indestructible network that cannot be compromised by a single person or a tyrant. And I think that's a very important thing to say. So pardon me, I'm not a political guy, but I think that's very important to say, is that our money is our money. And, and when we pay taxes to people, fine, pay taxes. We want roads to be nice, and we want people to get, Medicare and stuff like that. But it reaches a point where it's like, piss off, like that guy didn't have to go and sue. What's the one they sued? XRP. He didn't have to go and do all that stuff. He could have just embraced the future of technology and made an empire 10 years ago. So
100%.
I think 100%.
Imagine how where we'd be if they fully embrace crypto right now. The United States, any country that would have went all in on crypto from day one. I mean, look what El Salvador has done. It's went from the most dangerous country in the world to the safest country, the deadliest country in the world, to the safest country in about a 4.5 year period. And I go, how'd they do it? Well, A, you locked up the criminals, but B, you make the legal tender of your country an asset that no government, no corrupt politician has the ability to print, steal, hyperinflate away. And then you talk about the traceability. So when you're talking about trying to find nefarious actors within your own administration that are trying to backwall you or go behind your back and do things, but now you have the ability to transfer or track the way that they could actually use your currency and money to do nefarious things. I mean, it changes the game. I mean, you level the playing field to where every single politician now, you can track every penny that they're spending, not just from their, personal wallets, but they're also their private wallet and the government wallet. I mean, that's the biggest game changer.
Have you ever heard of an honest government?
Never.
Have you ever heard? You've never heard of that. That's the first honest government. Bukele is a trailblazer, man. Like really amazing.
I can't believe he's not Epstein yet.
I don't know about that, but I do know that when you at least make a government slightly more honest than the average, you have an edge in terms of finance flowing into your country. So imagine now, so in economics, the difference between exports and imports is very important. Also, foreign capital inflow. So, do you think right now that foreign capital is not inflowing into El Salvador? No, obviously it is. So, I don't think America is, because in droves, especially from non-American countries, because they see what's happening there and they see that there's a financial opportunity to take part into the base layer in terms of the bonds, because the bonds are backed by the Bitcoin as well. And so when you see that these government bonds are backed by sound money, not only will you have a great country being built on a sound financial base, I guess, or a base layer, you're also going to see a lot of foreign money, which is funny money. They're going to start pushing a lot of that money to get a piece of those bonds. And that's why American bonds are going to suffer unless Larry Fink does the needful. So that's what Larry Fink's doing. I think he's going to build a Bitcoin-backed bond, government bond, which I think is a very good idea. I think he's a very smart man, even though people say he's evil. He's a very smart man to build a, anybody with money.
I mean,
he's evil.
He's most likely going to hang, right? Like, he will be charged when we hold these people accountable and they declassify all that information, and he's charged with treason and crimes against humanity. There's only one punishment for that crime. So his days are numbered, no matter what he does. And I hope he does a lot more good for Bitcoin before his time comes, but his time's coming. It's just a matter of time before everybody around the world sees the crimes that these people committed, and they're put on display for the entire world to see. He can buy his time with Bitcoin and do whatever he wants, but that man is, I mean, when they tried to inject your children with a chemical bioweapon and they tried to force mandate that on you, and he is the person that pulled all the strings and made it all happen. He was that guy, right? I mean, that's we don't want to get political about it on this show, but I mean, these things happen,
No,
and they're bad, and they need to be talked about, because we can't forget what these people did to us, especially to our children. And until we hold these people accountable, how does the world get better, right? How do you even, like, I mean, it's like Jack Dorsey, right? He rigged.
I'm a realist, right?
Tell me.
I believe that no matter what the government structure is in any culture or time, it requires you to be at least somewhat slightly evil to be a leader. It's very hard to see somebody like a Bukele, and I can't think that he's fully, a good gentleman as well. I mean, to get to a level of power, Ryan, you must be
ruthless.
You must be unscrupulous and ruthless. And so anybody in power is going to be ruthless. All we can hope is that our ruthless overlords do something wonderful, like backing government bonds with Bitcoin, and at least giving the average Joe Schmo like me and you, taxpayers, that's all we are. And, we're trying to build things, and pretty much, right? I mean, it always has been that way since the days of the Byzantine Empire, right?
Yeah.
So like, all we really want is, for these guys to give a little bit back to the people, to the middle class, and just allow people to have happy lives and have good families. And the way you do that is you build a Bitcoin-backed bond. And I really think that that's what the BlackRock guys are trying to do, because they see that it's actually going to probably hurt a lot more to let the American dollar collapse and not have anything to go to. So as long as we see that happen, I still think evil people will be evil and good people will be good, and that most people are a combination of good and evil. And that's just kind of the reality, no matter what time or space or country you live in. Some are less than others. But I just really hope that what happens is we can build a standard off of Bitcoin and use that to rise the tides of all countries in the world, so that all people can be at least slightly better off than they were before. Because I look at like things like Africa. I don't know if you look at Nigeria much, but right there, they're using crypto in Nigeria to pay for things and to save their money and to not get hyperinflated out of their money, because the government just hyperinflates to pay for things, right? And so when you see that happening, and government's looking again and going, oh, okay, maybe we can use a Casbah to do transactions in Morocco. That was done the other day. People were buying cigarettes with Casbah and stuff like that. That's actually really good for everyone, not just America, not just Canada, but for everyone. So we really, maybe on an ending note, we could say that, we hope that governments can do well. They probably never will, but maybe at least they can back sound money. And by backing sound money, we can actually have a fair and level playing field.
Yep.
Where
Fix the money,
freedom
fix the
is
world.
restored. Yeah, I think so. That's a great way to end, I think.
Yes, it is, my friend.
It's great.
Man,
fix
Steve,
the money, fix the world.
Yeah, fix the money, fix the world, man. It's an honor. So
Yeah.
tell everybody, give yourself a big shout out. Let everybody know where they can follow you. Tell us a little bit about your product on the way out the door, and we'll wrap it up.
Sure. You can always reach us at our Discord. So just go to @KadenaBet, KadenaBet. There's a link there if you want to come and jam and see what we're coding. We do code videos every second day, pretty much. You can see what we're building and get used to us and our family there. If you want to learn more about Kadena and just talk to KadenaBet or any of its founders, we're on Twitter @KadenaBet. We're also on Telegram as well. Just look for KadenaBet there. Just search for it in the search bar. That's where we live, always mostly on Discord. And we're just really happy to talk about Kadena, introduce people to Kadena or betting. Just come on and talk to us. That's where we live. So that's us, KadenaBet, the betting protocol on the Kadena blockchain network, L1.
Man, Steve, it's always an honor to have you on the show, man. Hopefully you'll continue to come over here and join us as a regular. I know you got a lot of work going on, but anytime you're welcome, or anytime you want to come back on the show, you're welcome. God bless everybody. Thank you guys so much for stopping by the Crypto War Room tonight. I greatly appreciate you. Normally, I was going to do live calls where I thought these interviews were kind of be like my LFA show, where it's just like a 1 hour show. But these are some of my good friends that are going to be coming on here for the first week. So these calls are obviously going a lot longer than an hour. So we're not going to do the live calls tonight, but we will pick those up after I get through this first round of interviews and catching up with everybody. We'll start doing 1 hour shows. We'll keep it to a timeline, take some live calls, and then wrap it up. So that's the end of the show tonight. Thank you all so much for stopping by the Crypto Breakdown. My name is Ryan Matta. God bless you. God bless America. And thanks again, Steve. Greatly appreciate you coming on here. Go buy some Bitcoin. Go buy some Kadena. Go buy some Flux. Okay, catch you in the next one. Peace.
Thanks, Ryan. Whew, amazing.